the next couple of hours. Catch the most authoritative analysis of Budget 2024 with the biggest and the most influential voices. Market veterans Ramesh Damani, Ramdev Agarwal, Mahesh Nandurkar, Nilkant Mishra, and Rhythm Desai will give their take on what Finance Minister Nirmala Sitharaman has to offer. Stock markets have been surging in the run-up to the union budget, and our market masters Nilesh Rao of Kotak, Prashant Jain, Sameer Arora, Prashant Khemka, and Madhu Kela will tell us what the street is expecting. The budget is likely to set the tone for the markets amid inflation and possible global recession fears. Sunil Singhania, Nilesh Rao of Envision Capital, Gautam Duggad, Gautam Trivedi, and Dharmesh Mehta will tell us the way forward. Foreign investors are largely in selling mode this year. Some of the biggest India investors will talk to us about their take on the markets. The key ask from Finance Minister Nirmala Sitharaman is to balance fiscal needs with structural reforms to support medium-term growth. And some of India's leading economists will map the macro layout for us. Industry's creme de la creme will tell us how balance sheets are looking and what is their wish list from the Finance Minister. From seeking lower individual taxes and higher capex for infrastructure to creating better employment opportunities. These are some of the key asks from Nirmala Sitharaman. Tax is the other big factor to watch in the budget for the salaried class and for corporates in particular. We will be joined by top tax experts with their take on the tax angle. Voices from North Block, Revenue Secretary Sanjay Malhotra, Finance Secretary TV Somanathan, DEA Secretary, DPAM Secretary, and other architects of the budget will join us to talk about the economic impact of the FM's announcements. And a very special segment this year. We will ring the budget bell live from NSC. Stay tuned for a mega exclusive right from the NSC floor.
Okay, well, that's a power-packed lineup through the course of the day. And of course, right out of that budget speech, you will hear the best voices here on CNBC TV 18. Let's welcome our first guests on the program. We have Jahangir Aziz, Global Head of EM Economics at JP Morgan. We have Arvind Sanger, Managing Partner at Geosphere Capital Management. Gentlemen, great to have both of you here. Thank you very much for your time. Jahangir, let me start with you. You know, markets, of course, want the best of everything, right? Higher expenditure, continued expenditure in investment, infrastructure, something for the mass consumption sectors, and of course, no compression in expenditure. The thing is, I mean, they could actually do it because of higher tax revenues and the RBI dividend as well. So just, I mean, set this up for us, Jahangir, in terms of how you're looking at it. Will this be a pro-growth budget?
Sure. So let's start with the starting point, right? So the starting point is last year's budget deficit. It was supposed to have been 5.8%. It turned out to be 5.6%. So you get 0.2% off the bat as carryover revenue from last year that was not spent. Then you add the 0.4% of GDP of higher RBI revenue that was transferred to the budget. And then if you look at tax revenues, tax revenues grew at 13.5% last year on a 9.5% nominal GDP. In the interim budget, the assumption was about 11.5%. So even if they hold on to the interim budget 11.5% growth rate, because you're starting from a higher base, you're automatically going to get a larger revenue. So clearly there is a significant amount of revenue space that has been generated both because of last year's more austere budget as well as the transfers from RBI. And the question therefore is, what will they do with it? Our sense is that they're going to stick to 5.1. So remember, it was 5.8 to 5.1% in the interim budget. It is going to be 5.6 to 5.1, so it's a much easier task. But more than that, of that 0.5% of consolidation that they will have to do, 0.4% of GDP already comes from the RBI. So as far as the economy is concerned, the drag on the economy is barely going to be noticeable at 0.1% of GDP.
Fair point. Okay, good evening, Arvind. Welcome to the show, you as well. As a foreign investor, what do you want to hear? What you definitely don't want to hear today?
Well, we certainly want to hear about pro-infrastructure spending. And we certainly want to hear about tax simplification, as you were talking about earlier in your program, capital gains and other taxes, just simplifying that structure. Obviously, if the government does rationalize and the individual taxes, because of the 10-year no movement in the in the bracket, so there's been a bracket creep, if I may call it that, in terms of the minimum exclusion, that will also help in terms of consumption. So all of those would be pro-growth. What would be not pro-growth is if they were to increase taxes on capital gains. That would be regressive from a market standpoint. And I guess the question is what kind of transfer payments, because it's clear from the last election that there's going to be some pressure on the government in terms of either giving more to states, specific states, or more in terms of subsidies or other benefits to rural India. And again, I don't think we're opposed to some of those measures which might come about, but we still want to see, as Jahangir was just saying, that 5.1 target either stay there or maybe even improve a little bit, which I think there's some room given the higher tax collection. So, the RBI dividend gives them some room, and there's room from the high tax collection, which should allow for, I wouldn't call it a dream budget in terms of, but at least a pro-growth and also a pro-consumer budget without busting, the balance sheet.
Pro-growth, pro-consumer, lower taxes. I mean, if all of that comes through, it'll definitely be a dream budget. Arvind, Jahangir, good morning, and thanks for taking the time out and speaking to us. We were talking about a fall in the fiscal deficit, right, Arvind? And India has by and large been a darling of global investors. If we do get a fall in the fiscal deficit number, if the target is met, and perhaps, as Lata was talking about, the possibility of rating agencies upgrading India as well, do you think that will spur the animal spirits further? Because now the problem is that a lot of the good news perhaps has been priced into the Indian markets. What do you think could keep the market going here on?
Well, look, 5.1%. First of all, let me say at the outset, I'm not a big believer that budgets are the make or break of what's going to drive the markets or the economy going forward. Budgets are just an interim step in that. I think that the real issue is what is the economy going to do and what is the government going to do to facilitate it? So in my opinion, some rationalization of taxes and some increase in capex, because the interim budget only showed a 10-11% increase in capex. We think those are the two most important things that the government can do to continue to unleash animal spirits as far as both consumer spending is concerned and as far as business confidence to be able to, one of the things that has been missing, to be perfectly honest, in terms of a big engine for the next level of growth has been private capex. So obviously, there are things like the PLI scheme that are helping, but I think we just need to see more of that, and therefore, staying focused on the things that the government can do to enable that is important. One thing that we haven't talked about is what is the government going to do about the public sector? And unfortunately, I think it's unfortunate that the public sector see the privatization or disinvestment seems to have fallen off the table. I would like to see that reemerge, but I don't know if that's hoping for too much.
Arvind, you mentioned taxes, but did you mean taxation on the capital market side? Because I think that has become the big chatter, because it got a mention, especially the F&O segment got a mention in the economic survey as well. Before that, you had the SEBI chief, the RBI governor in a different context talking about flows into capital markets, etc. So just a quick word there, Arvind.
I was talking more about individual taxes. I'm not hoping for any negative surprises.
I thought so. But on capital market taxation, nothing, right? I mean, you're not expecting anything. That's not the base case at all.
I don't think so.
Okay. Jahangir, there's one argument that the government has more money because of the RBI dividend, which is a one-off really, because of high returns on their FX from US treasuries, etc. So that should be used only for fiscal deficit reduction, because if you put it on programs, how will you get the repeat money? Then there is the other school of thought which says that consumption is weak. I mean, we've got to do when we can. Which way would you lean?
So look, there's always a balance between the two of them. It is clearly the case that you need to have consolidation. You talk about, this budget being 5.1%, let's say it's 5.1%. You got about 3.2, 3.3% of state deficit. That puts India right at the 8.5, 8.6, 8.7% level of combined deficit. At 10% growth rate, with a target of bringing down this 5.1% to 4.5% in the next fiscal year. Even if that is possible, you need about a 10% nominal GDP growth rate just to keep debt at the current level of 81, 82% of GDP. So clearly there is a reason, there is a need to bring down these high levels of fiscal deficit. But on the other hand, as you said, look, this economy is still about 5 percentage points below its pre-pandemic path. It has been running basically on two engines, public infrastructure and services export. The other parts of the economy haven't fired. And therefore, there's a need to make sure that consolidation is balanced. Now, we keep talking about, weak consumption. Where is the weak consumption? Consumption grew exactly what real incomes grew. Last year, nominal GDP grew at 9.6%. If we assume that household income and corporate income shares did not change, I think I haven't seen the KLEM data, which has some data on wages, but I haven't seen that. But assume that the two haven't changed, then I'm going to assume that incomes also grew at 9.6%. You have 5.5% inflation. That gives you real income growth at 4%. Consumers' real consumption grew at 4%. Where is the puzzle? The puzzle is that why did real income did not grow at the level at which the official GDP number is? That's a different problem altogether. Consumption did exactly what it was supposed to do. Real income grew at 4, consumption grew at 4. So I don't understand why should we be boosting consumption? You boost consumption when consumption is growing less than what it should be growing at, which means that precautionary savings are going up because of uncertainty or some other reason. Then you do something on the fiscal side and the policy side. But Indian consumers are doing exactly what the real income growth is telling them to do.
Okay, fair point. That's one way of looking at it. I mean, the overall numbers, GDP 8% and consumption 4%. That was one way of looking at it. But take your point. I mean, all this will be debated. Arvind and Jahangir, thank you very much for sitting up for us. We hope when you wake up tomorrow, at least there won't be any tax tangles. Thank you very much for joining us.
Thank you.
Okay, but where did the US markets leave us yesterday? How is the markets poised? Can you update?
I mean, I'll just begin by that tax tangle that you mentioned, because I think that is the number one thing, right? And I think it's also become the number one thing now because the economic surveys mentioned it yesterday. And I mean, you just go on social media, you speak with people, and that's the only thing that people are actually talking about. So just a few points here. So markets will be relieved if the budget doesn't touch taxation of any kind on capital gains, etc. There is some chatter in the market that, F&O income may be categorized as speculative income, because right now income tax rules don't clearly state. Many people claim it as business income. But if the issue is, F&O and the huge spurt in volumes, etc., can you address that specifically without changing the overall, rate at which an asset class is taxed at? So I think that is where this is coming from. So something to watch out for. Positioning is also very interesting. We've got the highest divergence between FII and local smart money positioning that we've had in many, many years. So look at this. FII long positioning in index futures is at a 7-year high. Non-institutional, which is super HNIs and HNIs, etc., they are short the index futures big time. Some 2 lakh contracts, right? FIIs are long at a 7-year high, and locals, which is HNIs, are short in a big way as well. How will this resolve itself is the question. I've heard some say even before the election result, FIIs were actually short in a big way. But I think there's an important difference. Back then, FIIs were big sellers in the cash market as well. Right now, they are long index futures, but they've also started buying. I mean, in July, they are on track to buy the most they have since December of 2023 in a long time. So I think that's an important difference. Global backdrop is positive. I mean, overnight action is good. NASDAQ was up 1.5. Russell 2000 is also up. There is, of course, that US election playing out. So, I mean, kind of circles us back to the levels here. Support for the Nifty is at the 20-day moving average. Remember, Nifty Bank, mid-cap index, small-cap index, they've all broken their respective 20-day moving averages. Only the Nifty remains. That level is 24,265. And if that goes, then you're looking at a test of about 23,800, which is the 40-day exponential average. Nifty Bank, it touched the lower Bollinger Band yesterday and then had a bounce. We need confirmations. And the only way you will get confirmation that the sort of correction consolidation is over, if we take out the previous highs for the Nifty Bank, that stands at about 53,357. Support for the Bank Nifty stands at the 40-day, which is 51,266. I mean, I think if you don't touch taxation in the budget in any case, because the pitch has been raised a little bit with the mention in economic survey, you perhaps could get a bit of a relief rally. But can the budget itself be a big trigger for the market to, see another step up re-rating? I think that is also unlikely. At least that is not the base case right now. But we'll find out in a couple hours from now.
Okay, I just want to put on the table the exact sentences in the economic survey.
Yeah.
The market capitalization to GDP ratio is not necessarily a sign of economic advancement or sophistication. Financial assets are claims on real goods and services. If equity market claims on the real economy are excessively high, it is a harbinger of market instability rather than market resilience. And as if this is not enough, the final sentence here, the financialization of economies has not ended well, even for advanced economies. All stakeholders, capital markets, regulators, and government must ensure that capital markets play their theoretically assigned role of directing savings to the most productive interests, most productive investments. So, I mean, making it 10 times clear. You may argue with is this the government's role? Should it be nanny? You may argue. But this is the government's POV. Let's be in no doubt.
And this is the big concern that the government has. Fair enough. But we're now joined by Neelkanth Mishra of Axis Bank to talk about what you can expect from the budget, whether to expect anything at all. Neelkanth, good morning and thanks for joining in. The common view is that the government has A, RBI's big dividend, and B, healthy tax collection. So it is sitting on a bonanza, which it can deploy meaningfully in a sector of its choice. Do you agree, and does the math add up?
The math adds up, and I think both of these have to be dealt with separately or differently. So the RBI dividend, while I also think that the dividend in FY26 also could actually be well above 1.5 lakh crores, but that's not how the government is likely to think, and it will treat, and it should treat, the excess RBI dividend as a one-off. It is not something that can be assumed to be a steady state. So therefore, it cannot be spent on policies which are going to last many years. And therefore, my expectation is that some part of it will be spent in bringing down the fiscal deficit. So 5.1 going down to 4.9, wherein the 70 basis points of consolidation, which the government thought was prudent, that the economy could withstand it in January, it will persist with that. And given that FY24 deficit came 20 basis points lower than in the revised estimate, it is possible that they will bring it down by 20 basis points. I think the rest of it, while it would be tempting to use it for further consolidation, it would be, if you do consolidate, or the consolidation is very aggressive, it can actually slow the economy down. And therefore, it would make sense to have the money spent. And I think the most prudent way to spend it would be to increase the interest-free loans that the government is offering to state governments should they want to do capex. And so that is how a large part of this, the one-off bonanza from the RBI dividend is likely to be spent. There is also going to be some additional income that may come in the budget versus the vote on account, which can be perceived to be more steady state in the sense that another maybe 30,000 crores. And that amount can actually be spent on things like Pradhan Mantri Awas Yojana Gramin, where the government is planning to ramp it up meaningfully, or maybe some tax adjustments that may be made. But the number actually is going to be much smaller than the 1.5 lakh crores of extra money that the government has to take decisions on.
Okay, Grameen Yojana, you said. Now, from that comes this question. Which sectors, in your opinion, are going to see the biggest push? The common expectation, of course, is that infrastructure and capex will get a boost. But you tell me.
I think the priorities of the government would remain the same. Remember that the government is because of the interventions that were necessary during COVID, is saddled with a lot of debt. So the debt to GDP at a general government level is still above 80%. And therefore, the economy still needs to be very careful on how government monies are spent. And I think the priority will remain things which have much higher fiscal multipliers, and that means more spending on infrastructure. Though, given that the government, in the central government's mandate, is restricted to national highways, railways, airports, major ports, and telecom, the ability to spend more on some of these areas outside of railways is actually fairly limited. And therefore, the expectation I have is that they will actually hand it over to state governments, where the state government can spend on a whole range of issues on the capex side. So that, I think, will continue to be the priority of the government.
Nilkan, will we see a big vision being outlined? Because this is the first budget of NDA 3. Will we see something laid out for the next 5 years?
The president's speech, which, as you know, when the Lok Sabha starts, the president addresses the joint session of parliament, and that in a way lays out the intentions of the cabinet. The president speaks on behalf of the government. And there, the message was very clear that the vision for the next 5 years, to at least the broad vision, because I don't think there's been enough time to flesh out all the details, but the broad direction is something that will definitely come out in the budget speech. So it's very important to look at the event of the budget into two parts. The first is the fiscal arithmetic, we just discussed that. And the second is the speech itself, which actually gives a signal to the economy and the various participants in the economy of the broad intentions of the government. And I do think that those will be fleshed out to some extent in the budget speech.
Okay, but I think the big thing on everyone's mind is capital gains taxation, right, on stocks. What is your view? Will any change whatsoever be a huge issue for foreign investors?
So there is the issue of the foreign investors, which is where I think the fact that there are very high capital gains, or if the capital gains tax on equities was to be raised, it would definitely make India among the higher taxed countries, jurisdictions on the equity capital gain side. But then there is the domestic allocation and how the differentials in tax rates are distorting the flows into certain types of assets. And that is, I think, the challenge in front of the government, that you are seeing perhaps excessive flows into equity capital markets, and you are also not seeing, at least so far, a lot of that going into what I would call primary investment. So a large part of the supply response that is coming, there was a strong demand for equities, supply was limited, so the prices went up. This is how markets work, so supply is now responding. But a lot of that supply is actually offer for sale, basically promoters or venture capitalists or even multinationals selling off their stake. There's nothing wrong in that. In fact, the bigger returns they book, the more their commitment to the Indian market. So all of that in long term is good. But in the near term, maybe the economy could be better served by having a slightly higher allocation to maybe the bonds, where lower bond yields could actually bring down the cost of borrowing. So I think those are the variables that the government will be considering before they take a decision on this. So the decision will be less influenced by how foreign investors may respond, but more about how domestic asset allocation decisions are getting distorted by the tax structure in India.
Okay, so that's on capital gains tax, but eventually the market is going to look beyond the budget, right? And at this point in time, looks like there is some amount of time-wise correction that the market is staring at. What's your view on that?
So I would say that and I've been saying this for the last 10 years, that the market should generally ignore the budget, because the budget is a statement of accounts of the central government. There are far more interesting things that happen in state budgets, for example. And this is the way the government is also now signaling to the markets that a lot of the policy decisions get taken outside the budget cycle. This is very different from what used to happen till about 15, 20 years back. So I think it's a lot less important for the market than it was 25, 30 years back. So the overall market, though, I think the point that we need to keep in mind is that the acceleration in growth expectations. Remember that in Jan 23, so 1.5 years back, the expectations on India's GDP growth were much weaker. In fact, very famously, the US's, the fact that there was no recession, or there hasn't been a recession so far, is something that has been used to justify why the US stock market has done so much better. Well, guess what? I mean, our FY25 GDP numbers have been upgraded by more than 3 percentage points in real terms and higher in nominal terms in the last 1.5 years. So what we have to keep in mind is that those upgrades are most likely now behind us. I think the economy is growing at 7% plus, but I doubt that it is currently in a position, given what's happening globally, to grow at a much higher pace, faster pace than that. So as that happens, I think the market's euphoria, I think, will have to be tempered a bit, because the continuous positive surprises that we have become used to may not happen anymore.
Nilkan, thank you very much for that, and look forward to speaking with you once the budget is out and we have the actual numbers with us. So great speaking as always. Mahesh Nandurkar is now joining us. He's the India strategist at Jefferies. Mahesh, great to have you with us here. Thank you for your time. Let me just sort of reverse the order of what I want to ask you and start with what is the hot topic, which is equity taxation or F&O taxation, whatever you want to call it, especially after that mention it got in the economic survey yesterday. What are your thoughts? Are there any expectations? And on this topic, what is the feedback you've got from foreign investors?
I mean, investors obviously don't like any increase in the capital, gains taxation, which were talked about, some time ago. My sense is that maybe this particular budget, we may not really see too many changes on that. But I would say that there is a fairly high probability of some increase in the taxation levels, maybe in the subsequent budgets. What we've generally seen is that it has also become a global trend, and we have seen some element of increased taxation on high income bracket or capital gains taxes in many other parts of the world, in the developed world as well, including some things like proposed taxation, even in the US, on on unrealized capital gains, etc. So looking at the global environment, I believe that at some point in time in the future, there is a high chance of capital gains taxes going up in India as well. But I don't think any major changes are likely in the upcoming budget itself. So that's what I feel. But any adverse changes is obviously going to pull back, pull down the investor sentiments. So we all know that the markets have done well and the valuations are definitely on the higher side. Investors are sitting on substantial gains. So even a small negative on that side has the capability to bring the markets down.
Okay, well, I hope this is not the year when capital gains taxes are tampered with, right? Do you think the numbers on capex will be higher than what was presented in the interim budget, Mahesh?
See, in the interim budget, the capex growth that was projected was about 16 to 17%. My sense is that those kind of numbers will be held. Whether there will be substantial jump, I'm not so sure, but that maybe 1 to 2 percentage point higher is possible. But I don't think there's going to be a substantial jump into those numbers, but at least those numbers should be held at the level that was projected at the time of the February 24 budget. That's the least in my view.
And in terms of boosting consumption, any specific measures that you're expecting?
Well, the government has clearly talked one thing, which is there is the focus on affordable housing. I think that is clearly something that the Prime Minister announced as one of the first big announcements after he assumed the office for the third time. And I think you will see more clarity on that emerging in the upcoming budget with the with the clear-cut definition of the schemes, etc. So I think yes, affordable housing is definitely going to be one in my view. And then obviously the government has many other ways. They could probably take a relook at some of the taxes at the lower end to boost consumption. If you look at what has happened in the recent state budgets, there has been some element of cash transfer schemes which has been introduced. Mm, I think the central government can also possibly maybe do a bit on that side as well. We already know that the government has a cash transfer scheme existing for the farmers. Possibly maybe some of those numbers go up, and there are many other ways as well. But yeah, those are some of the things that come to your mind straight away.
Okay, Mahesh, thanks a lot for explaining to us what one can expect as we head into the budget. And hopefully we'll get to speak to you again post the budget takes place. Let's slip into a quick break. We have still some time before the pre-opening rates. But when we come back, our market master of the day, Gautam Dugar of Motilal Oswal Financial Services will join in. We also have Dipan Mehta and Prakash Diwan who will be with us for some fundamental stock analysis. Keep it with CNBC TV 18.
Well, it is the morning that we've been waiting for when Finance Minister Nirmala Sitharaman will rise in Parliament to present her 7th consecutive budget. With that, she makes history. It's a record. She will break the previous record of former Prime Minister, the late Morarji Desai. But while the Finance Minister makes history with her 7th budget, this is also the first budget of a truly coalition government, because remember, the BJP does not enjoy absolute majority this time around. So what will the factors be that the Finance Minister will have to weigh in? There are already demands from allies like Andhra Pradesh and Bihar. Will we see those being accommodated in the budget is the big question. Outside of that, what we pick up from all of our sources is that the budget will build on not just the interim budget, but will build on the previous 6 budgets the Finance Minister Nirmala Sitharaman has presented. So continuity more than change is likely to drive the budget thrust, both in terms of policy intervention as well as in terms of fiscal math. We are given to understand that there's unlikely to be any significant departure or deviation from the numbers that the government had held out in the interim budget, be it capex, be it fiscal consolidation and the glide path. Now, if you look at the Chief Economic Advisor's economic survey, what does he say? That growth is steady, inflation is under control. So the Finance Minister goes into this budget with a relatively strong performance as far as the economy is concerned. Not to say that there aren't challenges, there are many, but as far as the fiscal cushion is concerned, and we will have Lata giving you more math on that, there is a significant fiscal cushion that the government enjoys on account of better tax collections as well as the dividend that's coming from the Reserve Bank, which will provide the government some elbow room. 6 growth priorities. What are those growth priorities that may find a mention in the budget? Boosting private sector investment. I think that is absolutely clear. That
Well, we have less than 3 hours before the finance minister talks about the union budget. So all eyes are going to be on that. But in the interim, we also have a market to trade, right? So our research team is standing by with CNBC TV 18's list of top stocks for the day. Let's take it straight to Abhishek to talk about Federal Bank, which will be the big mover today, and Jana Small Finance Bank as well. Abhishek, over to you.
Well, to begin with Federal Bank, RBI has approved the appointment of Mr. KVS Manian, Kotak Bank Deputy MD, as the MD and CEO of the bank. Now, this is with effect from 23rd September 2024. So, Mr. Shyam Srinivasan's last working day will be on 22nd September 2024. CNBC TV 18 exclusive have been confirmed. So, CNBC TV 18 was the only channel to mention that KVS Manian is the external candidate whose name has been been sent to RBI from Federal Bank. Now, remember that we reported on 15th of February 2024 as KVS Manian being one of the candidates for the post of MD and CEO at Federal Bank. And then again, we did report in June 2024 that he's the only external candidate whose name has been sent to RBI for approval, and that news has come true. With respect to Jana Small Finance Bank, asset quality has deteriorated massively. Remember that we did alert our viewers that microfinance or rural segment is in pain and asset quality deterioration is seen over there. So if you take a look, gross NPA in absolute value has increased 30.5% on a sequential basis. Net NPA has increased by 85% on a sequential basis. So gross NPA ratio is at 2.62 versus 2.1% in the previous quarter. Net NPA ratio is close to 1% versus 0.56% in the previous quarter. Even then, PCR has dropped, that is provision coverage ratio has dropped to 62.7 versus 73.7% in the previous quarter. So expect the stock to be red in trade today.
Right, Abhishek, thank you very much for that.
Just like credit access.
Yeah, credit access was a disappointment yesterday. Absolutely. Well, IT is doing no better, actually. I mean, Coforge, I think, is a bit of a disappointment. Zensar Tech margins have come under some pressure. Rima is going to detail both those out for us. Rima.
So for Zensar, the growth is very strong. Constant currency revenue growth of 4.3%, but margins for the company have been impacted due to a bankruptcy of a client. So margins have come down to 15.2%, putting some pressure on the company's profitability. The other stock that we're looking at is Coforge, where the revenue growth is 1.8%, but margins for the company have come down because the company has spent nearly 80 crore related to legal and professional fees for the Cignity acquisition. So that's put pressure on the company's margins and profits. But if you strip that out, adjusted margins are largely in line.
Okay, got that, Rima. Okay, Vivek, you're tracking Suzlon's numbers and signed DLM.
That's right, ma'am. Good morning. So Suzlon, very good set of numbers from the company. Even the execution has improved this time around. Strong Q1 order book is quite healthy, and along with that, the wind turbine generation business, that EBIT margin has improved significantly, both sequentially as well as on a year-on-year basis. Revenues higher by almost 50% on a year-on-year basis. EBITDA up 80%. EBITDA margins are improving by 300 basis points, coming in at 18.4%, and profitability is higher by almost 3 times when you're comparing it on a year-on-year basis. The wind turbine generation EBIT margin has come in at 8.3% versus 4.3% sequentially. And when you're talking about the order book stands quite healthy at 3.8 gigawatt. Now, talking about Cyan DLM, it's a largely inline set of numbers with what the poll was anticipating. Revenues higher by 19%. EBITDA margin at 7.8%. It's moderated on a year-on-year basis, but slightly better than what the poll was anticipating. Profitability almost doubling again on a year-on-year basis. Order book, however, has softened both sequentially and on a year-on-year basis at 2,126 crore. Expect green on both of these stocks.
Okay, thanks a lot for that. But MRPL, the reported numbers look really good. Sonal is here to tell us about that. Oh, actually, in fact, it's the other way around. I think the numbers have fallen compared to what we've seen in Q4. So Sonal, over to you. Also, you're going to talk about Allied Blenders.
Good morning, Sonia. Well, yes, MRPL, we've been talking about how refining margins have fallen, spreads across products have come down, and that is something you can see in MRPL's numbers as well. Revenue down 8%, EBITDA is down 74%, margins have contracted by 700 basis points, leading to a profit contraction of 94%. GRMs, they have come down to $4.7 per barrel versus record high levels that we saw in the quarter gone by at $11.4 per barrel. For Allied Blenders, this is the first results they have reported after listing. So these are Q4 numbers. Margin improvement is the key positive this time around. Higher finance cost is something which has widened losses. Watching out for the debt numbers, 720 crore rupees has been paid via the IPO proceeds. Now revenues, they're absolutely flat, but EBITDA is up 20.5%. Margins have improved by 120 basis points. Finance costs are up 22%, and that has led to losses coming at 2.4 crore rupees. But that stock will be on our radar on the back of Q4 numbers this time.
Okay.
All right. Sonal, thank you very much for that. So that's Allied Blenders for you. Some orders coming through for 2 companies, GE Power and Railtel. Vivek has got details on those 2. Vivek, morning.
That's right. So post-market as both of these companies announcing order wins, GE Power has actually received an order of almost 300 348 crore. Now, this particular order is for renovation and modernization of steam turbine engines. This is for an NTPC GE JV project, which is being executed at Vidyanchal. So 348 crores is the total value of this particular order. Railtel is the other stock on the radar. The company has received an order of almost 187 crores from the Ministry of Railways. The execution time period is 4 years, and this particular order is for the design and development of HMIS, which is Health Management Information System, and also a hospital referral portal. Expect some gain on both of these names as well.
Oh, yes, gains, you're right, Vivek. You know, Railtel has risen 237% in the past 1 year. I'm giving you your YOY numbers. And GE Power, the other stock Vivek mentioned, has risen 200%.
Oh.
So, well, these are things to remember. When we say good news, we mean the news is good. But let's see what happens. Okay, Manisha Gupta is with us. Manisha, what should we remember in terms of commodity market cues this one?
Lata, thank you. I'll, of course, keep an eye on the import duty scrap for metals into the country today, and we'll, of course, see that in budget. But in the meanwhile, take a look at the metal prices itself, and we've seen many of these metal prices, metal stocks come off its highs in the recent few days, and that trend perhaps just about continues. You have seen dollar strength in the international markets. If you look at the LMX index, that has declined 5.5% in the previous week. This is an index that looks at 6 base metals in a row. So you are looking at lack of major policy shift coming in from China, even as the third plenum meeting has gotten over. And while, yes, China has moved in sense of interest rates, but a 7 basis points and a 10 basis points really doesn't cut it. So markets are looking at big bang infrastructure or directional structural things coming in from China. Until then, you could be looking at some more pressure coming in for metals. Is the reason you have iron ore prices now trading at a 3-week lows. Copper is trading at a 3-month low. So is aluminum, by the way. And the zinc prices are trading at a 1-month lows as well. If you look at the last 1 month itself, we are looking at higher inventories, lower physical demand in China, more exports, but not so much of domestic demand. And that has led to prices decline anywhere between 6 to 8% in the matter of last 1 week itself for many of these metal prices. And today isn't any better.
All right, Manisha, thanks a lot for that. Well, we have about half an hour left for the pre-opening rates to kick in. And then a couple of hours before Nirmala Sitharaman speaks, Gautam Dugar, the head of research institutional equities at Motilal Oswal Financial Services, joins us now to talk about his expectations. Gautam, hi, good morning. And as always, it's great seeing you, especially on a big day like today. And I must say, it is an exciting budget to watch out for, right? I mean, this is a government that has come back to power for the 3rd straight term. So everyone's interested to see what aces they have up their sleeve. What do you think could move the needle of the market today?
Hi, Sonia. Good morning. Thanks for having me. So yes, it's a big day, and this is the first budget of a new government. So market will be very keenly awaiting the policy signals, what priorities they point out, not just for the remaining 6 months, because in another 6 months, we will have the next full budget for FY26. But what policy agenda they lay out for the 3rd term of this government? Where are the focus areas? We have seen for last 10 years now that capex in infrastructure investments, PLI, manufacturing, that has been the broad architecture under which this government operated. And of course, fiscal conservatism, because the quality of the balance sheet management by this government has been excellent. As we move forward, I think this government in this particular year has an extra firepower of about 1.5 lakh crore. So how do they use it for welfare spending? Do they use it to revive the bottom of the pyramid consumption, offer some freebies or tax concession? That is a new element which has come in. I think that's largely a reflection of the mandate that this government has got, where now we have a coalition government in place. So that is the second element that one would watch out for. And third, of course, how's the overall balance sheet numbers stack up, whether they go for 5.1, 5, 4.1, that's a matter of semantics. But as long as the fiscal deficit stays within a range, the overall macro sentiment of India, which is improved significantly, because if you look at the current account, the stable currency, the rising forex reserves, and overall growth. So both macro and micro are in a perfect combination. What one wouldn't want to see, obviously, is any negatives on taxation. So that's broadly 3 elements on which at least I would be looking for.
Okay, I take your point, Gautam, but if you read the economic survey, there are large chunks of fears of over-financialization and, markets getting too exuberant. That's very much there in several paragraphs. So let us assume for argument's sake, capital gains is not touched, but F&O gains are defined as speculative. I mean, some people are saying that that's a possibility. How will the market react?
I think obviously there will be some knee jerk, but it is not something which is unexpected completely because a lot of regulators, whether it is SEBI, whether it is RBI, and now of course the government in its economic surveys, have been pointing out about the excesses in F&O, and they've been cautioning the investors, specifically the retail investors, which come in with a big surge because you look at the way the entire demat accounts in India have gone up from 3.5 crores in March 20 to almost 16 crore now in 4 years. Of course, a lot of it is also for investments, mutual funds, and SIPs, etc., etc. But clearly, the F&O volume, especially in the last 2 years, have taken a huge surge. So while it is difficult to say what exactly they will be doing, but some measures are widely expected to come, and that's been an expectation for 3-4 months now. So let's see what actually happens. We'll see what they do, whether it is in the realm of short term or are there any measures from a long term point of view. So very difficult to say before one actually goes through it.
Gautam, hi, morning. I know it's not just one day, but today is that one day. So in terms of sectors, Gautam, which you perhaps could see incremental boost, are you watching anything specific? I mean, housing is being talked about, and what other things, 2 or 3 top ideas?
Sure, Prashant, good morning. So I think last 8-10 years, we've got accustomed to watching manufacturing, housing, capex and infra sectors in this government regime. Today, for a change, I would be looking at consumer sector because that is where expectations are changing a bit as far as policy is concerned. Whether they provide some tax relief, whether they increase the budget for Manrega substantially, or whether there are some other handouts, whether increase in PM Kisan installment for the farmers from 6,000 to whatever 8,000-9,000. So some of those things are going to be new because we are not used to seeing this. In fact, if you remember the February interim budget, I don't recall any instance in the past when in an election year the government has budgeted only 3% increase in a revenue expenditure. So if my numbers are correct, I think they had budgeted 3.2% increase in FY25 budget estimates, which they presented on 1st February. So we'll have to see whether there is a realignment in the expenditure mix away from capex towards consumption, or the extra bounty that they've got, would they provide it completely for driving consumption. So that those are the 2 sectors we will keep a special eye on. In fact, that is a sector where we have increased our weight also recently. And then, of course, the usual things around railways, defense, roads.
That's fine. But since you're watching consumption more than investment and capex, etc., what are the 2 or 3 from your published universe? What are the 2 or 3 stocks best levered if there is a boost to consumption, in your opinion?
So Prashant, the names are not too different. Actually, we've just put in Hindustan Lever and Godrej Consumer in our model portfolio. In fact, in April, we had put out a thematic report on consumer staples where we had turned positive on it after 2.5 years. Obviously, the logic was that we are going to get a normal monsoon. Of course, we didn't anticipate that the mandate will be little more fractured than what we have seen in the past 2 terms. But yes, post 4 June, the expectations about government policy focus shifting incrementally towards supporting consumption, because we have 3 big elections in October, November, Maharashtra, Jharkhand and Haryana. So those expectations have got well entrenched now. So with that in mind, we had tactically changed our call on consumer staples in April. And in the model portfolio revision that we just did 2 weeks back, we had introduced Lever and GCPL back in our model portfolio. Overall view on consumption is still tilted more towards discretionary. If you look at our model portfolio, we have 20% allocation towards consumption, out of which 15% is in discretionary and just 4 or 5 in staples. And yes, another sector which could potentially benefit if there are measures for consumption is obviously going to be auto, 2-wheelers, and maybe at the margin 4-wheelers too. But all of that assuming that there are no incremental changes in taxes.
Okay. Yeah, we'll get to know. Gautam, just stay on for a minute. Let me go across to Shireen. She is at the CII headquarters and may have also picked up some buzz overnight. Shireen, good morning. What do you have for us?
Well, good morning, guys. We are here at the CNBC TV 18 budget headquarters in partnership with the Confederation of Indian Industry, as we've done for the last 25 years. But, Lata, Prashant and Sonia, as Gautam was pointing out, and this is something that we've been reporting as well, that the indication is that there is likely to be continuity. Continuity not just as far as the fiscal arithmetic is concerned, but continuity also in terms of policy direction. So even though the government is sitting on that fiscal cushion on account of the higher tax collections, as well as that bonanza that's coming from the RBI, the expectation isn't that there is going to be a significant departure or a deviation from the interim budget numbers. Also, I want to highlight something that the chief economic advisor pointed out in the economic survey and then reiterated in his interview with me on CNBC TV 18. I think industry needs to take note of the message that the government is sending out. And it's not the first time Finance Minister Nirmala Sitharaman has been sending this message out to the industry over several public meetings, in consultations privately and publicly, that we have done the heavy lifting. It is now time for the private sector to pick up the baton and move as far as investment is concerned. Now, here's what the CA told me. Corporate profit before tax in FY20 was at 5.3 lakh crore rupees. In FY23, it's risen to 20.6 lakh crores, which is almost 4 times. So the private sector has had an excellent run, which is good for them. They have great balance sheets now. So now it is time for them to come good, not for the sake of the economy, not for the sake of the government, for their own sake. He calls it the enlightened self-interest, saying that, look, if you hire more, you pay better, it is going to create that demand cycle. But the question is, capacity utilization still across many industries is between 70 and 75%. So industry is talking about putting up fresh investments. In fact, the CII pulse check clearly suggests that industry is looking at putting in additional capacity. But the expectation from industry still is that, look, the government needs to do better when we talk about capex. So that 11.11 lakh crore rupee number that the government had provisioned for in the interim budget, the ask is that the government should do higher than that. But I would be a little bit more tempered in that expectation, given what we have pointed out at this point. Remember, this is also the 7th budget for the finance minister, the 7th consecutive budget. So in many ways, she's creating history with this budget, crossing the previous milestone of Morarji Desai. But this is the first budget of a truly coalition government. The BJP does not enjoy majority. Andhra Pradesh has already very specifically put its asks on the table. Bihar, not specific, but has asked for more. As Gautam was pointing out, you have state elections coming up. So what will the mix be? What will the judicious balance be is going to be something to watch out for.
Oh, absolutely,
Lata.
absolutely. Point taken, Shireen. I've been old enough to see many budgets and many cycles. And I can tell you, in 2006, 2005, there was Rakesh Mohan saying lazy banking. They always are trying to goad bankers to lend and industry to invest. But industry and bankers do it in their own good time. I mean, you just have to have that animal instinct. And what triggers it, we really cannot say. So we'll keep coming back to you, Shireen, on that. But let me put that question to Gautam. Gautam, you told us what you are going heavy on before, or what you guys like before you get into the budget or in the last few weeks. What would you avoid? I mean, I'm just looking at all these rail stocks and PSU stocks. It's crazy, 200%, 300% over the past year. Are there any avoids, even if it is a capex heavy budget?
So, Lata, you asked a very important question. Even if it's a capex heavy budget, you have to figure out which elements of the capex there is still risk reward which is left in favor of the investors. To buttress your point on railways, and may I add defense also, we just put out a data a week back. I think Anuj did a program on that in his editors roundtable 2 last week, where we just pointed out that in the last 3 years, defense market cap in India, all the listed companies, has gone from 1 lakh crore to 11 lakh crores from March 21 to July 24. So that's an 11x jump. Similarly, for railways in the same period, the market cap of all listed railway stocks have gone from 1 lakh crore to 7 lakh crores. So cumulatively, these two spaces have gone from 2 lakh to 18 lakh crore market cap, which is a 9x jump in 3 years. And profits have gone from 15,000 crores to 30,000 crores, which takes your trailing price to earnings multiple from 12x or rather 15x to about 60x. So clearly, lot of the buoyancy which is expected in the business in those two sectors is already reflecting in the underlying market cap and stock prices. So one has to be extremely, extremely cautious if at all one wants to invest in those spaces. Otherwise, you can stay away from those spaces because the risk reward is clearly not in your favor. If you look at the markets broadly, Lata, large caps still look very okayish in terms of valuations. We are still trading at 20 times 1 year forward for Nifty, which is in line with 10-year average. I get the point that ex financials, the market is slightly expensive because the last 5 years, earnings have compounded at 18% for Nifty, and market cap has also compounded 18%. But if you strip aside financials, you have a 13% compounding in earnings and 19% in market cap. The real problem still lies in mid and small caps, where the re-rating has been crazy. If you look at the same data for mid cap, with a 17% earnings compounding, you've got a 27% market cap compounding. So it's a 60% premium out there, and that is where you have to be very, very mindful of what you're buying.
That statistic, the first time you told me, is stunning, Gautam, right? 2 lakh crore market cap has become 18 lakh crore market cap in two sectors, rail and defense, right? That is the kind of increase in market cap. So I would be, okay if I say, Gautam, for the budget itself to be a big driver, right, for these sectors. I mean, it's going to take a lot incrementally because prices move on incremental news. Would that be right, Gautam?
And that's a fair assessment, Prashant. But budget is a one event. We obviously get very excited around this event every year.
Today's budget,
February, and then we realize by 3rd of the February that budget is a history.
Correct.
Unless there is some big negative, and I think this time it will not be any different. Unless you get a very big negative in the budget, people will forget this budget in the next 2 days, and focus will be on fundamentals and earnings. And that is where the real, problem is in some of the spaces which are trading at 60p, but earnings are growing at 10-12%.
Okay.
So I think focus will turn back to the fundamentals in another 2 days, unless you see some major negative announcement in budget.
And hopefully we won't see that, especially taxation, as you also mentioned. Gautam, thanks very much for joining us. Great speaking with you here on CNBC TV8, and hope to speak with you once again after the budget is out. Deepan Mehta is with us, a director at Elixir Equities. Prakash Diwan is with us here in the studios. Prakash, good to see you live. Gentlemen, thanks very much, both of you, for joining in. Deepan, if I can start by asking you, so 1 or 2 sectors or stocks specifically that you have on your watch list, if you have one, with the budget a few hours away.
Yeah, Prashant, good morning and thank you for having me on your show. I think it's going to be all about agriculture. So broadly, agrochemical companies, fertilizer companies, and special situations like Shakti pumps, which is totally focused on pumps which go into agriculture. These are the kind of sectors that we would like to be overweight on. The monsoon has been good, and I think further impetus to rural and agriculture will mean that these companies, I think, should have exceptionally good quarters next 2-3 quarters or so, and valuations are still reasonable. So something like a Coromandel International, which is India's largest fertilizer company with a lot of backward integration, is something which should be on your watch list. I thought Shakti Pump's numbers were exceptionally good order book position over there, and increased spending on rural sector and government schemes for pumps should benefit that company. Agrochemical companies also should do exceptionally well. I think PI Industries did well yesterday. And there's Dhanuka Pesticides, which is also a favorite of ours. So I think that's where we like to be overweight on when we go into this budget.
Okay, that's Deepan, I just wanted to point out that actually yesterday in the economic survey and in our interview, the CEA said the monsoon has been subpar. That's one of the reasons why he's moderating the GDP forecast to 6.5%.
And that may also give them an incentive to boost rural consumption in some way, right? So I wanted to take that question to Prakash Diwan here in our studio. Prakash, thanks for joining in. So many sectors to look forward to. There's green energy, there is defense, outlay for defense expected to go up. Then there is a rural consumption play. What would your pick of the pack be?
Good morning, Surya. So lovely to be here. It's very simple. There's so much that's already happened that on an incremental basis, if the budget really doesn't announce anything which is very distinctly higher, in fact, stocks would react downwards. So defense, railway, power, you are fairly vulnerable. It's areas which have not been spent upon is what you need to look at. And as you rightly said, rural consumption is something which also reflects in the FMCG valuations. Look where
that's the only place where there is value.
Exactly. And if the Nifty were to be supported by anything, banks are not doing their bit. IT is kind of sputtering. It's not been able to do that wholeheartedly.
Cap goods, there's not much of weightage. So where do you see the leadership come from? And that's going to be FMCG. So that's one pocket. The other area, I think, Prime Minister Modi's been talking about, the development of the common man. And from that perspective, you look at sanitation, water, these are huge opportunities. There is capex, there is infrastructure, but it's a different sector in which it's applied. So I would look at a lot of the, and incidentally, in the last 2 years, there's so much that's happened in terms of listing of new businesses in that space. So there's opportunity. Of course, there's small companies, so you don't have giants. And the third space that I would look at is something like cement. Housing is a great area to focus on. Real estate is, by the way, the best performing sector from the last budget to this budget. But has cement done its bit? The answer is not really. So we'll probably look somewhere.
Okay, cement and FMCG. You know what about FMCG? I remember the TVS Somanathan, the finance secretary, chiding me when after the last budget, the interim budget, I said, why are you being austere a bit too early?
Yeah.
Because consumption has not picked up. He chided me saying, it's not my job if FMCG companies want to make more money. But anyway, maybe on that point, we should go to Shireen. Shireen, early morning calls, anything you picked up?
No, Lata, I just wanted to come back to that point that Deepan was making and you pointed out to as well. There's this dissonance when we talk about the monsoon, because yesterday, if you heard what the chief economic advisor told us in his interview, he was very clear. 3 risk factors, the reasons behind that prudent 6.5% to 7% growth target that the economic survey has forecast. Number one, the patchy monsoon. But when later I had a conversation with Sanjeev Puri of ITC or Anish Shah at Mahindra, both of them believe that the monsoon is actually going to aid demand. And they were quite confident of the monsoon playing out well. In fact, Sanjeev Puri telling me that this is going to be a much better sowing season than the previous year. So there is this sort of dissonance. Does the government know more than industry? I don't know. But one of the risk factors put out by the CEA had to do with the patchy monsoon, but that wasn't a concern that was shared by industry. So I just wanted to put that on the table.
Your point. No, he pointed out it's not the total amount of monsoon that he was worrying about. He was worrying that 9 states have deficit. See, the overall is maybe long-term average. Yeah. The dispersion of monsoon is not too good in 9 states, and many of those 9 states are agrarian states. Absolutely. So, his worries were on that score. Okay, Deepan, you heard all this conversation. What's your sense? I mean, I take your point about Shakti pumps and all, inherently excellent numbers, and you want to pick. But what outside agriculture would you pick?
No, I think, we are a bit cautious on the market. So defensive sectors like IT, pharma, I think that's one should be overweight on. Nothing, specifically coming in mind as far as a play on the budget. I think all these companies like capital good manufacturing companies, industrials are pretty pricey at this point of time. Doesn't make sense. To risk return profile doesn't favor you. But the most important thing, Lata, has to be on the direct tax, especially capital gains. And that's going to really determine the sentiment in the market.
Actually, that should have been my question. Okay, let me first put that to you, Prakash. Let us assume that they don't tinker with capital gains. I mean, you don't say short term is now going to be 2 years, or he doesn't say short term is 20% and not 15. Let's assume it's only on F&O because that seems to be top of the mind worry. What happens to the market?
No,
macro market question.
I don't think the market would react negatively on that, because it's already built in. It's kind of an anticipation that's already built into the behavior of most traders. And remember, that impacts the pocket of short-term trading, which is not something which will impact your wealth creation trajectory. So if there's no capital gains tax change, I think the market will even if there's an F&O change, and we don't know in what form it comes, but all the indications have been focused onto the F&O and the speculative element of the market, not long-term investing. So I don't think capital gains need that tweak, and the government hasn't been seemingly worried about it. So hopefully we'll scrape through.
Okay, but Deepan, similar question to you. Let us assume that there's an F&O tax. F&O gains are defined as speculative gains. In which case, apparently they would be taxed at business income, at your slab, and you cannot set off losses. If that happens, is it very negative?
See, Lata, I don't think that F&O taxation is going to impact the sentiment. 9 out of 10 traders are anyway making a loss. So whether you tax it as business income or speculative will not make a difference. But long-term capital gains and short-term capital gains, any tinkering over there, anything to make it similar to what is there in debt mutual funds or in real estate, that certainly is going to impact the sentiment. There's clearly a lot of incentive to invest in equities because of just 10% long-term capital gains, 1 year holding period, and then short-term is 15%. So if they bring all these, on property, on debt, and on equity together, and make it somewhat like 3 years holding period, that certainly will impact the sentiment.
No, I completely agree. It's a bit like cigarette taxation. As someone said, people don't stop smoking because you have to pay higher taxes because the cost of a cigarette stick goes up. You want to do it for health. You usually give up for health reasons, not for the pricing.
Not
of it.
for the money
Demand is
part of it.
inelastic. In a similar way, speculation is very hard to sort of do it via taxation. But we'll see. What is being talked about is IT rules right now are very sort of ambiguous about how to tax F&O income. So a lot of people do it and show it as business income and set off expenses, running of business expenses against the F&O income. So tax liability goes down if you sort of tax it. If you say explicitly, this is now speculative income and will be sort of taxed at your slab rate or at the highest marginal tax rate. I mean, of course, that is essentially what the chatter is, what the fear is, especially after the mention in the economic survey. Deepan, just one, talking of cigarettes reminded me, ITC, cigarette taxation, will we hear anything? Always that chatter that NCCD, I think it is called, right? National Calamity Cess, whether they will take that up, and any thoughts at all, Deepan?
See, Prashant, I don't think that last several budgets, whatever tinkering they have done with indirect tax on cigarettes has impacted ITC's performance so much. End of the day, it's a very, very mature sector, and growth rates, volume growth rates are hardly 1 to 2%. They're impacted by imported cigarettes, and that's a big threat to the industry. And it's a very mature business. So I'm not that positive on tobacco companies. And the budget may do some tinkering, but I don't think it's going to have a long-term effect on ITC or any of the other cigarette companies in terms of their returns or what profitability they can generate going forward.
Okay, well, let's see. We still have about 10 minutes before the pre-opening rates kick in. So we'll thank both Deepan and Prakash for joining in and telling us what to expect in this budget. I think everyone is worried or looking at the F&O taxation part, right? F&O transactions, if they are treated as speculative income in the forthcoming budget, that would attract a straight 30% income tax plus a 4% cess instead of the applicable rates of slabs of 5%, 20% or 30%, right? So that is one fear that the market has. But let's see. We don't have to wait too long to find out. Let's take a quick break on that note. On the other side, Mitesh Thakkar along with Sudarshan Sukhani will join in to tell us what to expect on the technical side. We will also be live from the NSC with the CNBC TV 18 Budget Bell. We'll be joined by a whole host of guests and market masters live from the National Stock Exchange. Nilesh Shah of Kotak Mahindra AMC, Ashish Kumar Chauhan, the MD and CEO of NSE, Prashant Jain of 3P Investment Managers, and Morgan Stanley's Rhythm Desai will be with us. Stay tuned.
Message that the CEA held out, that it is time now for the private sector to act. Corporate profits are never as good as they have been, and this is the time for the private sector to pick up the baton from the government and to up investment. Strengthening MSMEs. Now, there's been a lot of talk around this. Will we see any specific measures or not is the big question. Remove growth impediments to agriculture. In terms of future growth priorities, the green transition, financing that will also be something that may find its mention. Bridging the education employment gap. And finally, building state capacity and capability. All of these have been identified as priorities by the economic survey. Will they find a mention in the budget? PLI. Remember, the survey talks about the need to create 78.5 million jobs annually in the non-farm sector. Will it be through more PLI schemes for labor-intensive sectors like industry has been asking for, toys, footwear, apparel, and so on and so forth, or employment-linked incentives? Again, a demand that CII and others have been making. Will the government allude to that? My suspicion is unlikely, but we'll have to wait to see. Finally, upcoming state elections, the government will have an eye on that. Big states, Maharashtra, Haryana, will be up for elections, and the government will want to send out a message that it is pro-farmer, pro-poor, and pro-citizen. So that could be the balancing act that Finance Minister Nirmala Sitharaman will have to negotiate as she gets ready to present her historic seventh budget.
As I've been saying, the standout feature of the upcoming budget is that the government has more money than it expected in the interim budget. It has higher tax and non-tax revenues. Firstly, the government has got a 2.1 trillion rupee dividend from the Reserve Bank, whereas the interim budget had only estimated 80,000 crore rupees. So overall, non-tax revenue goes up by 1.3 trillion rupees. Now, Finance Minister Sitharaman may also estimate tax revenues higher by about 40-50,000 crore. Firstly, because the final receipts of the FY24 budget show that the government collected 27,600 crore more than what the interim budget estimated. That's partly why the fiscal deficit has fallen to 5.6% from the interim budget estimate of 5.8%. Secondly, tax revenues in the April-July period on an average
Welcome back. It's a big day, union budget in a few hours from now. And the pre-open session should also be with us shortly. Let's get in Mitesh Thakkar and Sudarshan Sukhani, who are with us with what they want you to do today. Or if they want you to do anything at all, or just sit back and watch the budget and decide post that. Gentlemen, good morning. Great to have both of you here. Mitesh, how things set up and what's the recommendation?
Opinion that we might see some profit booking. It happened on Friday, but then I think with the event, I think there was not excessive shorting as well, and we saw some covering up yesterday. The broad idea is that I think the move will play out post the event. So therefore, I'll keep a close watch on the level, which could be important for both the indices. On the Nifty 24, 330, 350 zone, on the downside is the first support area, and Bank Nifty, the corresponding level is around 51, 950, 920 zone. Yesterday, we did test those levels, dipped about 40, 50 points below them intraday on Bank Nifty, but bounced back. So that's the level to watch out for. And I don't expect a very strong upside until something very positive come from the event. So in case we get to the upper pivot points, which is 24, 650, 700 for the Nifty, I would be tempted to take profits on long positions. Similarly, the Bank Nifty would suggest levels of 52, 600, 650 zone where I would, want to exit and book profits on the long side. So I think the indices might not do much if they hold on to the downside level, but I'm not looking at a very strong upside continuation. So the idea is that below support levels, exit longs, or around the first supply pivot points, exit longs.
Okay, so exit your longs, right? That's the moot point of the market. Budget or no budget, you're not expecting too much of an upside in this market in the near term. Sudarshan Sukhani is also with us. Sudarshan, good morning. Big day for the market. So, of course, I want your view on the index, but I also want your view on this speculation that F&O transactions could be treated as speculative income and then be taxed accordingly, right? If that actually comes through, what kind of impact would it have on the market, according to you?
Yeah, good morning. If that comes through, the markets will have a knee-jerk reaction and then forget about it. The important point is to make money. The tax is irrelevant. If a trader is making money, whether paying 25% or 35% doesn't make a difference. So I don't think it'll have a long-term impact. Of course, for short term, for a couple of days, things may go awry, but it won't make any difference.
Okay, great. That's good to hear, actually, and some sane advice. Now onto the market itself. At this 24,500 mark, is the risk reward still favorable for a trader as a positional trade? And what's the way forward?
Well, it's favorable because we've gone through a deep correction on Friday and still slowly recovering from it. But because of that, news event, it's not a good idea to enter the market till the market shows some direction. Once the market starts showing a direction, if there is a reaction on the downside, if you get a 100 or 200 point dip, that is a buying opportunity. Don't think it will go further down. Eventually, it will rally. Use options so that your risk is limited. But any dip of more than 100 points is a buy.
Okay, got that, Sudarshan. Good morning and good to speak with you after a long while. Stocks?
Yeah, good morning, Ata. Pleasure speaking with you. Shree Cement is a buy with a stop under 27,400. Kotak Bank is an intraday short with a stop above 1,800. Wipro had a big gap down that probably will continue on the downside. It's an intraday short, the stop above 525. And Asian Paints, which is slowly putting its act together. Remember, it is a blue chip, it's a buy with a stop under 2,900. But you be careful in the morning.
Fair point. I think the market will be on its edge and more waiting and watching.
Absolutely. Mitesh, what about you?
So I've got all buy calls today. Maybe a couple of them related to the budget side. Chambal fertilizers could have some impact. It's a buy above 520 levels if that first pivot is crossed. Keep a 10-point stop at 510. Look for a target of 540. JK Cement is buy with a stop at 4420 for targets of 4600. Gujarat Gas is a buy with a stop at 630 for targets of 670. And finally, AU Bank did give some reversal yesterday. So look for a target of 680 here. Place this stop below 644.
Okay, got that. Chambal actually has been discussed by a lot of people also because there is an expectation it will be pro-agrarian and maybe something, of course, Coromandel and Shakti Pumps and all of them also came into the reckoning.
No, absolutely. Mitesh, just a quick word on Aadhaar housing. I mean, rallied into yesterday's close. I think it's a new recent listing. Some sort of large marquee investors bought in over the last 1-2 months or so. I mean, again, it caters to the lower end of the segment. Housing perhaps gets a boost. How are charts looking though on this one?
See, that is one sector, which could be very interesting. And Aadhaar housing, I think, has been, ever since the listing, has been continuously, making newer highs. So the charts are looking pretty good to me. In fact, both Aadhaar and Aavas, I think, which will cater to the low income housing segment, I think are looking good on the chart. So maybe something positive will come in, but then this is an event day, so you really don't know what it will play out. But if nothing else were to happen, Aadhaar housing, I think I would still want to take a long with the stop below 450.
Okay, well, let's do one thing. Let's cut across live now to the National Stock Exchange. Exciting day ahead. Joining us from the NSE, a whole host of guests. We have Nilesh Shah, Managing Director, Kotak Mahindra AMC, Ashish Kumar Chauhan, the MD and CEO of NSE, Prashant Jain, the CIO of 3P Investment Managers, and Rhythm Desai, the Chief Equity Strategist India at Morgan Stanley. And of course, my colleagues, the best of the best, Nigel, Rima are also standing there. So folks, over to you guys. Okay, Nimesh is also there. I can see him there. Hi, guys. Good morning. Over to all of you.
Hi, we've got Ashish Chauhan also from BSC with us, just joining in. And we're all geared up for the D-Day. We're at the National Stock Exchange to decode the market mood. And the market has been resilient, right? 12.5%, 13% on the index so far this year. The mid-caps have rallied close to about 22, 23%. Is this going to be a historic budget where we're going to go for growth, not just for this year, not for the next 5 years, but maybe till 2020, 2047, when India celebrates 100 years of independence?
So again, I think it's going to be a big day for us, a big budget. In fact, Mr. Prime Minister already said that he's setting a tone for 2047. So, Rhythm, first to you, quickly, what's your big take or expectation from this budget?
See, I think the interim budget has already informed us that the government's focus is on macro stability. So somewhere between 5 to 5.1%, the fiscal deficit, I think that's the most important number that will get reaffirmed. Fortunately, the government has got some more revenues in the meanwhile, so I think most of it will go into more capital spending. So that I think it will be the theme of the budget.
Saying government should not raise more capital because where they're going to spend, right?
See, that's the point is that we're getting good compliance on taxes, both direct as well as indirect. So the government is now having a problem of plenty, which is a lot of revenues coming through, and therefore expenditures will need to expand in the context of what is, I think, going to be a very important year for fiscal consolidation. I'll emphasize here that the primary balance will come around 1.5%. And therefore, in a couple of years from now, we will be in primary deficit will be 1.5. And that will make India the only country in the top 15 economies in the world with a primary balance. So we are going to have a very, very strong government balance sheet in the ensuing 3-4 years.
We've got Ashish Chauhan also with us. Ashish, all set for the big day, geared up. This is the 7th budget for Nirmala Sitharaman. It's a record in itself. So do you expect this budget to set records? And what would be your key asks, top 3?
For me, it has to be a growth-oriented budget. And broadly speaking, once the infrastructure and growth are taken care of, it falls in place, including job creation and other things.
What about this entire pivot towards consumption? Nilesh, do you expect this budget to be very tilted towards consumption to an extent which could break the rhythm of the balance being too populist?
So this budget has to be achieving trinity of impossible. One, go on the path of fiscal prudence, which will eventually result into rating upgrade of India. As Rhythm mentioned, we'll have primary surplus, we'll have fiscal prudence, fiscal consolidation. Second, we have to continue investment in infrastructure. Last year, we came close to 10 lakh crore. Vote on account was 11,000 crore. This budget could probably increase it further. And since there is plenty of resources, we should also focus on creating inclusive growth. So trinity of impossible, fiscal prudence, investment, and consumption boost, all is possible in this budget. This budget has to be like Surya Kumar Yadav's catch in the T20 final. No impossible thing.
Impossible made possible this time.
Well, let's get in Prashant Jain as well into the conversation. Hi, sir. What are the expectations? Expectations are running sky high, and I think the warning out there is don't tinker with these long-term, short-term capital gains tax. But first, let's get to your expectations.
I think stability in taxation would certainly be welcome, and I think we look forward to continued thrust on infra spending. And I think otherwise we are all set. I think the outlook is great, and as Rhythm and Nimish said, I think it's going to be a good budget. I don't think it should be a letdown.
Okay, all right. And I think Shireen as well is joining in. She's got a couple of questions as well for our guests. Shireen, take it away.
Well, thanks very much, guys. It looks wonderful to see you all. I wish we were there with you at the National Stock Exchange ringing the budget bell. But thank you to Prashant, to Nilesh, Ashish and Rhythm for joining us at the NSE. But, my question to each one of you, and Rhythm, I'll start by asking you, as you pointed out, it seems clear that the direction as far as fiscal consolidation is concerned that has been set, that glide path will be maintained and there will be continuity not just in the fiscal arithmetic but also broadly in terms of policy. Now let's talk about politics, Rhythm, and this is the first budget of a truly coalition government where the BJP does not enjoy majority, and hence it's giving rise to speculation on whether this is going to be much more tilted towards welfareism, much more tilted towards populism, giveaways, and so on and so forth. I'll start with you, Rhythm. How do you see the political complexion impacting, if in any way, this budget?
Not really, Shireen. If that had to happen, it would have already happened. If you look at all the Prime Minister and the Cabinet announcements since June 4th, they have not been populist. They didn't increase the minimum support prices beyond inflation. In fact, the rate of increase was less than last year. The instinct was to actually do housing for poor, not to redistribute cash. When he was in Mumbai, he announced seminal infrastructure projects, not a redistribution of money. So I don't think the instinct of this government or the Prime Minister is to actually redistribute in a very large way. Redistribution is inflationary. It contradicts the government's emphasis to reduce inflation. Inflation is the primary source for poverty. So if you bring inflation back, you bring poverty back. So I don't think you'll see much in terms of populism. In fact, I dare say absolutely very little or almost nothing of populism in this budget.
Very little or nothing. That's Nilesh's Rhythm's call. Nilesh, let me ask you the same question. Would you concur with what we just heard there from Rhythm, or do you believe that the finance minister is going to have to find some elbow room to accommodate some of these interests?
So far the vote on account as well as announcements post-elections which has come has shown government's focus on creating infrastructure and enabling growth. And they haven't really focused on distribution of freebies. But I think distribution of freebies versus providing consumption support at the bottom of pyramid or rural India is not exclusive. For example, should there be more asset creation through Manrega? And for that, if you have to give some support in terms of money, I think it's worth doing. So the focus of the budget will still be on inclusive growth, not by giving fish to a person, but by teaching them how to fish.
Right, Prashant, I want you to come in on that. If that is in fact the way that the government approaches its political priorities as well as its fiscal priorities, what would you expect? I mean, there's a lot of expectation of sweeteners on the tax front for the salaried class. There's a lot of expectation that perhaps to aid consumption, especially rural consumption, that there could be a higher installment as part of PM Kisan and so on and so forth. On balance, as we get ready for the finance minister to reveal the fine print, what would your guess be? What would your best bet be?
I think, Shireen, this government has displayed fiscal prudence right throughout. And I think, as Nilesh said, the interim budget or announcement post that don't suggest any of that. I mean, I think consumption is weak because of it has grown ahead of the economy and consumer leverage is running quite high. And the key to solving that, as Ridham and Nilesh emphasized, is to increase incomes. And in any case, I feel if there are some steps to be taken, mainly they should be taken at a state-specific level. I mean, there could be some tweaking here or there on center also, but I think there is enough fiscal room not to disturb the fiscal consolidation path.
Well, speaking of disturbance or the possibility of disturbance, and again, my question to each one of you, including to Ashish as well, but Ridham, I'll start by asking you, what we've heard over the weekend, the commentary coming in from the RBI governor, the commentary coming in from the SEBI chief, and then the commentary coming in yesterday from the chief economic advisor specific to the surge in F&O volumes. The expectation is that perhaps there could be some ways of tempering, of checking the kind of move that we are seeing. Would you expect the budget to move forward on that? Ridham, I'll start with you.
No, Shireen, unlikely in the budget. It's not a matter of the budget. If at all, that will be SEBI that will be looking at it. I don't expect anything today on F&O.
Nilesh, any expectations, or you agree with Ridham?
Well, I think I'll agree with Ridham, Shireen, because he very nicely explained that, right now there is no need for more money in the hands of the government. So I guess, what Ridham was saying, it would be an important budget, but not too much from a market perspective. So hope so. Fingers crossed that, there is nothing big negative, so to speak, as far as markets are concerned. I think Nilesh wants to add a word. 1 second. Yeah, Nilesh.
See, Shireen, my recommendation is treat F&O as a tobacco. Tax it so heavily so that you get money and people who want to trade in F&O pays the price. An equity arbitrage fund is the perfect example. The tax collection to the government is 51% based on our data for last year. Last 3 years average is 56%. You get tax at 56%. Investor is happily complying. It's a win-win situation for everyone. So treat F&O like a tobacco.
I think Shireen, Nilesh has got used to now giving us a lot of headlines. Amar Akbar Anthony, now tobacco. So I think we should get him quite often to give us headlines, right? So hope so. I think, as I said, let's hope that the budget gives no negative surprise.
Achieve the impossible trinity and make it possible, right?
Absolutely, yeah.
So that's something that we'll be watching out.
Well, I think we'll continue with this conversation, but for the time being, we're just moments away, actually, a few seconds away from the opening bell. So I request Ashish to please come. Just 20 seconds to go.
8,
7, 6, 5, 4, 3, 2, 1.
Well, that is the budget day bell. Markets have opened, and it's over to you guys in the studio to give us the early rates.
All right,
Okay, the early rates are that it's a 0.25% high on the Nifty. So it started up with a bang, and that, I guess, was expected. We did see the US markets giving us a nice bump up. So early morning rates are expectedly about 0.25% higher, 24,576 as I speak. And the big gainers for the moment, cement companies. Ultratech is up 1.3, HDFC Life 1%, Grasim, JSW Steel So basically, smokestack stocks.
I mean, a lot of news-related stocks also coming up on your screen. Look at Federal Bank, right? That the announcement of the new CEO, Mr. Manian, finally, I mean, that announcement coming through. We reported it first here at CNBC, 3% higher on Federal Bank, right in the word go. Coforge is starting about 2.5%, 3% higher after numbers, although there was, I think, a bit of a margin disappointment, but Coforge is starting up. You got Shakti Pumps, we heard from, I think, Deepan in the morning, right? 5%, I mean, clockwork. But it's done phenomenally well. Suzlon is the top volume traded gainer across the board on the NSE. It's got about 5% gains right now. Railtel is coming up with 2.25%. I mean, you got a spattering of some of these names. I'm not sure how much of this is.
Railtel got an order.
They had an order post-market hours. Oberoi Realty is up 2.5%. So a lot of news-related action straight off. Torrent Power is up about 3.5%. There is, HOEC, Adani Power, some of the other names. NCC starting with about a 3% pop, right? I mean, we'll watch if that package for Andhra comes through. So I think there'll be that expectation as well right now. On the downside, you essentially have MRPL, which is starting with a 4% cut, but that's the only one. And there is a Scient DLM, which is down about 4%. Look out for these market intermediary stocks, especially on the broking side. After all that we've heard on taxation, Angel One is starting about 1.5% lower. It's already corrected quite a bit from 3,500 plus to just about 2,100 right now.
By the way, good opening, right? I mean, the mid-cap index is now up almost 300 points. I don't remember recently when the market had such a strong opening or pre the budget announcement. But so far, so good. The advanced decline ratio is almost at 1,400 stocks. Look at that. HUL, by the way, comes out with numbers today. It's sitting at a fresh 52-week high as we speak. It's at this 2750 mark, which is a fresh high there. Federal Bank, by the way, is at a fresh 52-week high as well. It's already given a 30% gain this year. And as we know, it's gotten the RBI nod to appoint KV Subramaniam as the MD and CEO. So that's the big talking point this morning. And a couple of these rural-focused stocks, right? Godrej Consumer, PI Industries, HUL, all sitting at fresh highs. Perhaps in anticipation of something coming out for the rural market. So good opening for the market. Let's see how it goes. But Nilesh Shah has also been sitting here with us. Nilesh, this is a budget. It seems like it's a budget for everyone, right? They have a lot of funds, access to make all the right noises. But what are the top three things that you would be expecting this time? And can it really move the needle of the market?
I'm not sure they can move the needle of the market, but it will surely set the tone, the direction for not just the next 1 year, but maybe for the next 3 to 5 years in terms of what's the government's thinking, especially when this government is so advantageously placed in terms of revenues that they have, that there's so much that can be done, and how they allocate these revenues is going to be the key. And so clearly the pet themes of the government have been the focus on infrastructure. It has been essentially giving a boost, spending more, focusing more on the investment side of the economy. And I see that as a big continuity going forward.
Okay, I want to unplug from the budget for a moment because the big gainer is Federal Bank now 5.96% higher. 3%, 6 rupees higher, doing extremely well. Now, I remember one of the first stocks I covered at a rally like this was UTI Bank. When PJ Naik was appointed, UTI Bank had gone through absolute shit. It was like, suspended from trading and stuff like that. But PJ Naik, it went from like higher to high just after that announcement. 15 days of the stock going through the roof. Leadership can do magic. Your views on Federal Bank?
No, absolutely, Lata. Leadership can do magic, especially for a services industry like banking. I clearly believe that leadership can do a lot. We own Federal Bank. We've been owning it for more than a year now. I've had essentially the honor of working with Manian. And believe me, he's a seasoned banker. He's a go-getter. He's a performer. And I think it's a wonderful platform for him to really build on from what Shyam has spent the last several years in terms of resurrecting Federal Bank. So to that extent, I think it's probably the best of all worlds right now for Federal Bank. A strong foundation and a strong leader now.
Okay, Nilesh, I'm going to come back to you, but let me go across to the other Nilesh as well, who's there. Gentlemen, Nilesh, Rhythm, Ashish, Prashant, thank you very much for joining us. Prashant this side. Nilesh, if I can just come to you, if you can hear me. You said you compared F&O taxation and tobacco taxation. The question is, do people quit smoking because of taxation? It's debatable, right? Will people quit F&O because of taxation? Just a question in jest, but it's a question worth pondering.
I didn't compare FNO taxation with tobacco. I compared FNO with tobacco addiction. Now, one, we need to educate people that smoking is injurious to your health. SEBI is already putting warning signal that ordinary 9 out of 10 investors lose money. So there is one part is education. The second part is that if despite education you want to trade in FNO, then pay a fair share of tax. And which is what equity arbitrage fund are doing. 51% collection in last 1 year, 56% in last 3 years. What more can government need?
Okay. Well, Nilesh, what's your, I'm now asking Nilesh of Envision. Nilesh Shah, thanks. What is your sense? If FNO alone is, treated as business income or speculative income, which is what is the buzz, what happens?
No, I'm sure it's even currently treated. F&O income is treated as a business income.
Okay.
I'm not sure if essentially taxing it higher is going to be a silver bullet. Like what Prashant said, if people anyway are not making money in F&O, if that's essentially what the reports are suggesting, how does taxing it higher in any way help? Number one. Number two, I think kind of curbing that activity beyond a point will essentially impact the liquidity of the markets. I mean, if we want institutional capital, we want institutional investors to essentially hedge their positions and all of that kind of stuff. I'm not quite sure how this is going to really help. So I'm not sure if that's
the harm, you think?
Yeah, I'm not sure if that's the remedy. I think what markets first need is liquidity. I think, and if any kind of excessive steps, it may just impact liquidity of the markets and may, in a way, not create a very conducive environment for institutional investors and the big investors. So I clearly believe probably the remedy lies elsewhere.
Yep.
Okay, all right. We got that, and we've gone on quite a bit with regard to this taxation. So I want to put a couple of questions to Rhythm. Rhythm, with budget in focus, and we have this debate about how the PSUs, some of them are very overvalued and on a PE basis, and the multiples are gone out of whack. But do you think it's a good time for the government to take advantage of it? Come in there and throw in some paper, sell some stakes in some of these companies, and raise some money, given the kind of valuations that some of these companies are trading at?
Yeah, that's always possible. And maybe it's also part of the budget, but really the government has a problem of plenty.
Yeah.
So revenue collection probably is not the key thing here. We have to see how the government is allocating what it already has in its bucket, because really if it chose, it could consolidate the fiscal deficit even further.
Yes.
But that would be detrimental to growth in the near term. So I think the key is really how they spend. There may be some piecemeal divestment targets, but I don't think that's critical to this budget.
But do you think that maybe converting some of this equity, into maybe state-of-the-art infrastructure, spend more on capital, that could be a possibility? As you said, problem of plenty, capitalize on the situation, raise some money from the equity market, and in fact, pursue goals.
The problem remains the same, which is the execution capacity of the government. So I can keep raising revenues, but if I don't have the execution capacity, what will eventually happen is that the government's cash balance at the RBI will keep rising, and we will have a liquidity crunch.
Okay.
So I think that balance needs to be there. So I'm not against the idea of selling some overvalued stocks, but I think the key is whether we can find
with the money that
use for that money and execute it to build infrastructure. Now, of course, this government's track record is incredibly good, so they can probably do that, but I think that's the key.
Okay.
Just to put some numbers, the PSU market capitalization now stands at 80 lakh crore. The government ownership is close to about 50 lakh crore, which means if they even divest about 2% of their ownership, they can raise close to about 1 lakh crore. But
I'll give you another statistic, Rima. 3 years ago, that entire market capitalization was 15 lakh crore to 80 lakh crore. Yeah.
Okay. Prashant, budgets usually are a non-event over a period of time. So over the medium term, what is your view on the market? Because history tells us when you invest at these levels, at 21 times forward multiple, so it's not out of whack with long-term averages, you don't make too much money. So what's the medium-term view on the market, and are there positive triggers on the horizon?
No, I would agree with what you said, that this is certainly a time to tone down expectations. I think real growth rates will accelerate, but India is a lower inflation economy, and the big catch-up in profitability of corporates is behind us. So going forward, I think, and there Rhythm has a slightly different view, I feel profit growth should be around 12-14%, and multiples are reasonable. So I would expect these markets to deliver low teen kind of returns over the medium term. And there is a narrative that so much money is coming into the market, so market should do much better. When the supply is also caught up with that demand, so I don't think that argument really holds.
Okay, by the way, folks, just hang on. We are just taking one look at the market now, which is absolutely flat. But one pocket which is doing very well is autos. So M&M, Eicher, Maruti are all your top gainers right now. There is something expected for green mobility for sure this time around. So let's see if that comes through. But gentlemen, morning to all of you sitting there at NSE. Rhythm, I wanted your thoughts on, which sectors you would be backing now. Budget or no budget? I mean, are you expecting infrastructure, capex? There is expectation that a lot could be done for rural consumption as well. What does your pecking order look like in terms of sectors now?
I would agree with Prashant, by the way, that the expected return on the market is low teens. It's not going to be high teens. I think a fair bit of the earnings coming forward has been baked in. With regards to sectors, I think the low-hanging fruit, in my view, is private sector banks, the large ones. They look very attractive, and it doesn't look like the market is priced in the coming earnings cycle in those stocks. I would selectively buy industrials, but very selectively. I think in a lot of places in industrials, valuations look too rich, and there could either be a big correction or there could be a period of consolidation in which investors don't make returns. The third sector, I think, is IT services, where I'm very bullish. I think IT services, like the large private banks, are not pricing in the next cycle, which I think is going to be AI-related spends that will come to their way. And then lastly, I think, again, selectively consumption. I like the auto cycle. I think auto and auto part companies are going to do very well, and it's not fully priced in. And in some part, mass consumption, maybe retail. I think those are the places that we would go to.
Okay, thanks for that, Rhythm. Actually, same question to you as well, Prashant. What have you been buying in the run-up to this day?
I think I would almost entirely agree with what Rhythm said. So we are positive on private banks. We are positive on capex selectively, on discretionary consumption, and even on IT. I don't think we can bet against it. The only place additional where I think there is still some room for maybe a marginal re-rating and continued growth is the power utilities, especially in the public sector.
Gentlemen, I want to come back to the three of you. And Nilesh, I'll start by asking you, how should we factor in the narrative that came through from the economic survey, and specifically, the chief economic advisor telling me very clearly that, look, now the baton has to move to the private sector. The private sector has to do now the heavy lifting when it comes to investments. Corporate profitability has quadrupled in the last 3 years, and hiring and compensation haven't kept pace. We've done our bit. The private sector needs to go out and do more. So do you believe that there should be a tempering of expectations, that there will be more PLI schemes, for instance, or there will be more relief to the corporate sector in any form or fashion? How do you read that message coming through from the survey and the economic advisor? And more importantly, how do you see it translating into the budget, if at all?
Shirin, clearly the ingredients for revival of private capex is in place. Low leverage, high capacity utilization, availability of equity financing through market, reasonable availability of credit in the banking system. It's still growing in double digit. What is lacking probably in some sense is animal spirit, and that is where ease of doing business is critical. That's not going to come from the budget. It has to keep on continuously coming in from outside of budget. Second, there is need for PLI scheme for labor-intensive industry. And most importantly, in vote on account, there was announcement of 1 lakh crore fund for investment into futuristic technologies. I think that fund should be utilized through public-private partnership to support those technologies which our entrepreneurs can commercialize. As of today, we are seeing Indian patents filing rising, but we are not yet seeing those patents getting converted into investments. My wife is a doctorate from IIT Mumbai, and I've seen many of their colleagues giving a lot of theses on various things. But are those theses, are those PhD papers getting converted into investments on ground? Answer is no. I just hope and pray that 1 lakh crore vote on account fund announced will bridge the gap and convert investments.
Well, you're right in pointing that out. It's yet to be operationalized. In fact, the principal scientific advisor speaking to us in the run-up to the budget said that discussions are on operationalizing that 1 lakh crore rupee corpus on R&D and innovation. But Rhythm, to you now, to take that question forward, how do you see that reflecting in any form or fashion as far as the budget is concerned? And if I were to ask you in terms of priorities, while the expectation is continuity, the focus on manufacturing and job creation and so on and so forth, are there any new areas that you believe the government may like to focus on, any new ideas that you would watch out for?
Yeah, so Shireen, I think the first and foremost requirement is for the government to step away, which is what it is doing. By reducing the fiscal deficit, by reducing the primary deficit, the government is creating space for the private sector to borrow and spend. And the government's debt to GDP will continue to decline. It has already declined from the peak by 8 points. And in the next few years, it will continue to decline. So that's the first thing, which is that you have to create space. Having created that space, I think you may have to provide for some incentives in certain sectors, which require a little bit of government support. So I think those may come through in this budget. Sectors such as electronics, sectors such as food processing, lab-grown diamonds, maybe even defense, continuing from where we are already. So some of these sectors may receive specific incentives or specific plans from the government to incentivize domestication of manufacturing. The third is that we already have a global setup. China plus one is clearly underway. India has managed to lower its logistics cost quite a lot. The PM Gati Shakti program will lower it even further, and that does make India more competitive. So I do think as a natural course of action, more private capex will take place. The chief economic advisor in the economic survey has already pointed out to a 20% increase year on year in private capital formation. That's a very good number. So let us not actually think that there is no private spending happening on the capital side. It has started, the cycle has started, and I think it will continue to gain momentum over the next 3-4 years.
Well, that certainly is the indication, as he pointed out. It's encouraging, and that's what we're picking up here from industry as well, that in the second half, the expectation is that they will build on the investments that have already started. But Prashant, the same question to you in terms of themes, in terms of any new ideas, any new priorities that you believe the government is likely to go after with this budget. I mean, this is also a budget in many ways that is going to be about legacy. This is Nirmala Sitharaman setting a record. It is going to be her 7th consecutive budget. So any new spaces that you believe this budget is likely to negotiate?
I think, Shireen, I would entirely agree with what Rhythm said. We just need to do more of what we have been doing. And I think private capex is on the way up. But capex is a slightly longer lead item. I mean, between intent, planning, and actual execution on the ground, it could take few years. So I think we are moving in the right direction, and I would be very optimistic. And signs are already there. If you look at the order backlogs of companies like ABB, Siemens, they have grown significantly. As far as new areas, I think we need to continue to push. We don't have the ecosystem in electronics. I think that will need a lot of effort, and I think it will take few years before results will come in. But I think we are moving in the right direction.
Okay, right. Nilesh, I had one question to you. You've given us an example about arbitrage funds in comparison to PF. Suppose in this particular budget, given the backdrop that people are talking about, that the banks are not getting deposits, suppose they go ahead and give some kind of incentive for FDs. Say the taxation is eased out a little bit. Do you think they'll be sending a wrong message? They don't think of the STCG and the LTCG, but giving some kind of, leeway to an FD, will that send the wrong message out?
So again, it's like 5 blind men trying to figure out elephant. Why is bank deposits slowing down? RBI's own data suggests that between FY21 and FY23, 10% of households' financial savings went into currency notes. Are we doing anything to bring that currency notes into the banking deposits? If tax incentive is one way, let's do it. But the most important thing when we are giving tax incentive, we have to ensure that it's given for right reason. Now, generally, people make money, generate above inflation return, real return, by investing in equities and higher yield debentures.
Yeah.
bank deposits, insurance, pension fund, small savings, currency notes, they don't produce real return in a significant manner. So we should encourage investors to invest for a longer term in real return generating assets. That's how Indians will become wealthy. 93% of our savings are going in below inflation, negative real return or low real return products. Only 7% goes into high real return products. Do we want our country to be wealthy or not?
Okay, all right. Irrespective of what they do, Nilesh, I'm taking your advice very seriously. I'm in search of the Amars, as well as, putting the money in higher yielding assets, so to call it.
Gentlemen, this has been a great conversation. Thank you very much. We're going to leave you so we can all catch the budget at 11 o'clock. Thank you once again, Prashant, Nilesh, and Rhythm. With that, guys, it's over to you. Back to the studio.
Thank you. Thank you very much, Rima, Nigel, and our guests. Nilesh, thank you very much for your patience. And you tell us, in the last 2 months, what has attracted you?
So I think in the last 2 months, the bank space has got surely more attractive, okay, because the markets have rallied, the banks haven't rallied as much. And we've seen from the recent earnings, the results are pretty okay. I mean, they're in line and obviously there's a potential to grow and they probably seem set to kind of deliver mid-digit kind of growth. So that's one area which is kind of ended up being extremely attractive. I think the tier 2 tech space is looking even more attractive now. And clearly now, a lot of investors are realizing that it's time to kind of move away from the large cap IT and still kind of continue to focus on the second level of names. So that's another one area which is kind of turned attractive.
Do you like the autos by any chance? I mean, there's I think you've never liked the auto space.
No, I
right?
still think I'm a big believer yet of auto anchs. Okay. I still believe you remain OEM agnostic. You really don't care whether it's 2-wheelers, 3-wheelers, 4-wheelers, it's EVs, it's ICs, whether it's domestic market, global markets, it's replacement market. I think auto anchs essentially kind of are well poised to continue to deliver to you a very linear kind of a growth. Okay. The numbers there are way more predictable versus the OEM side. So I prefer to have the auto anchs. Did own Tata Motors, Mahindra and Mahindra at some point of time, but obviously now post this run up, I have exited in them.
Guys, Lata, you use that phrase, what is the stock which has caught your attention in the run up to the budget? You know what has caught my eye? A stock called MTNL. I mean, it'll come up on your screen. Just look at MTNL in the last 1 month. Actually, the last 7 days, the stock has doubled. I'm not sure if there is anything really happening there or the run-up in anticipation of something coming through in the budget. I think we were chatting earlier that I think all they have is really land, land holdings in prime locations like Mumbai, etc. Not sure, but that's a big mover. It's got huge volumes as well.
Only 2 cities,
yeah,
Mumbai and Delhi.
Yeah.
So why will their real estate not be precious?
Yeah.
I would respect the screen a lot. If it's trying to tell you that something is coming in terms of, divestment of assets of PSUs or something, that makes eminent sense. And the real estate cycle is in favor of such an action.
Yeah. Nilesh, housing, I want to talk about. You were saying that that's a prime sector through which, the government can push sort of consumption lower end, etc. What's the best play there in housing? Is it housing finance or actual sort of builders, etc., contractors? What's the sense?
I still believe housing finance is a better place to be in.
Okay.
I think there's a lot more consistency in terms of their performance, consistency in terms of their growth. And if you essentially can spot the ones which are essentially pretty strong in terms of their underwriting standards and manage their loan books quite well, I think housing finance is a great place to be.
Any picks there? What you like?
What we have been owning for a while now is Home First Financial. I think that's essentially a company which has been growing at about 30%. It's been expanding the ROEs by about 100 basis points. They're well capitalized. I think it's a top-class management team in place. So I think it's been great. Just that, of course, the overhang of some of the PE funds being large shareholders and they wanting to kind of prune their stake once in a while is the overhang. But I think as a business, I think it's an outstanding business.
For this entire consumption, which others have pointed out as well, what's the best levered play? 1 or 2 names, which you think if there is a real concerted effort to boost that lower end?
On the lower end, I still believe majority of the staples market is saturated. I think the big boys essentially, I think, are all in very saturated markets. I don't think any of them have the potential to grow even at high single digit or in double digits. I don't think so. Maybe right now, probably the 2-wheeler space has got the growth momentum. For how long, it's hard to say, but at least for the next few quarters, I probably think 2-wheelers, if you take that as a proxy for consumption at the lower end, Not that a 1 lakh rupee bike is kind of the low end, but nevertheless, that's what it
But
is.
that's the better way to.
I think it's probably a better way.
I have one question on consumption since Prashant brought it up. Since there's more money that could be in the hands of consumers, both in terms of perhaps bringing the taxes down as well as rural consumption, right? These e-commerce players, whether it is Zomato, whether it is Nykaa, Honasa, even the just pure food delivery, guys, etc. Is this a space where you think that there could be more upside?
I'm not sure how good are these proxies for the rural side. They probably are great proxies for the urban side, the urban middle class, the urban lower middle class. I think they're great proxies, but I still think that these are more kind of aspirational products or services where I think there's anyway going to be good demand. They have the momentum going for them. Tailwinds are very strong. I probably think the runway of growth for maybe the next 5-10 years is still very, very long and very high for these players. I would still anyway prefer this space irrespective of what really happens with today's budget.
I think Nilesh
The market is showing the first sign of a red, very little, but
flattish. No, on that platform point, you own PB FinTech. I mean, stuff we discussed earlier, right?
Yeah, that's right.
You like Paytm?
That's
well,
right.
Nilesh?
That's right.
Anything else there?
So yeah, we like all these names. I think there's a great space to be. And Prashant, our big call is that the way you probably owned some of these consumer names 20 years back and they became huge compounding stories, I probably think all these platform companies as a basket probably are great compounding stories maybe for the next 5-10 years.
Okay. Nilesh, thank you very much for being
Pleasure.
with us on a very important day, and we are going to harass you after the budget. For the moment, it's back to Shireen. Shireen has the high and mighty of Ficky with you.
Well, that is right, and I'm going to harass them a little bit more. Lata, we've of course been speaking to them over the course of the past week, 10 days in anticipation of the big day, but it's now down to the wire, so to speak. Anisha and Ankoinka, many thanks for joining us here on CNBC TV 18. Anisha, I'll start with you. I know that there's been a long wish list that's coming from industry, including Ficky, but what's the mood that you go into this budget with in terms of business confidence, in terms of being able to amplify that private investment recovery that the government is betting on, in terms of demand visibility? What's the mood like as you go into the budget?
Shireen, good morning. The mood is fairly positive. We've seen a good economic survey. The economy, for the most part, is in very good shape. The last few budgets have been growth-oriented, focused on capex formation, which is good for long-term from an economic standpoint. And we're starting to see some of the effects of that play out. So I would say the mood is positive as we start today.
Mood is positive. Anand Goenka, how positive and confident are you feeling? And if I were to ask you to give me a sense of the pulse check within the Ficky membership, how many people are now talking about fresh investments, adding capacity, setting up new facilities, etc., in the second half of the year?
No, absolutely. I second that. I think the mood is fairly positive at this point of time. Inflation is under control. The focus on capital investment by the government has been fairly strong, and we hope for that momentum to continue. And I think the key will be to create demand. And as consumption and demand picks up, I think private capital is very ready for investment. Balance sheets are deleveraged. And I think whether it is rural demand, which is beginning to see some positive signs, you just shared that two-wheeler sales are going up, tractor sales have been generally positive. So rural demand looking positive, as well as with the continued capex cycle, we are fairly positive as well about the future.
Anisha, and I want to pick up on this rural demand theme, because the expectation is that perhaps the budget will want to focus a little bit more as far as the rural economy is concerned. In what shape or form is yet to be revealed. But what would your expectation be, and where do you believe, if at all, more is needed? Where do you believe the government should focus, specifically when we talk about rural economy and generating demand there?
Shireen, we feel that the budget should really focus on inclusive growth. And as a part of that, rural economy is clearly an important component. If you look at the past 4 years, on average, rural has been reasonable. The past couple of years have been weaker. We're starting to see some green shoots now. And from a demand standpoint, it would help to have some level of stimulus in the short term for rural while focusing on capex formation for the long term as well.
So when you talk about some stimulus, are you talking about asset-creating stimulus measures, for instance, more as far as the PM Awas Yojana is concerned, something that the government is already focused on, the roads program, etc. Is that the kind of stimulus that you would expect or you would like the government to put forward?
That is in many ways the best kind of stimulus because the multiplier effect is far greater. And therefore, for us, we would look at more of the same in terms of what the government has done over the past two budgets, focus on capital formation, focus on that multiplier effect that will end up stimulating demand to some extent in the short term, to a greater extent in the medium term and long term.
Anand, we're seeing visuals there of the finance minister getting ready now to head to parliament with the president at this point in time. But Anand, the message from the government is that, look, almost 8 million, 78.5 lakh jobs need to be created annually, and the private sector needs to do its part in order to stimulate that job creation. Now, what is the sense that you're getting in terms of hiring trends? What about the skills gap? Is that coming in the way of hiring? On balance, what is the expectation both in terms of net additional hiring as well as perhaps higher compensation as well in the coming year?
Right. I think the government has ridden out the PLI schemes fairly well. We hope that there could be some more in job creation sectors like textiles and others. So if some of those are introduced, I think certainly that will help job creation. Second is there is a lot of change happening with respect to whether it is green transition change that is happening. That can be a large job creation sector. In the renewable space is one large space. And then again, the larger capital investment spend, which will really promote whether it is laborers, construction companies, new bridges and roads coming up, all of that will also spur investment. On the skill side, yes, there is an issue where there is a shortage of labor on one side and there is unemployment on the other. So I think bridging that gap and getting a longer term vision on how we can link the education policy, skill development and the needs of corporates will be something which we're very looking forward to.
Anish, I want to come back to you and ask you a question as far as how you are seeing the monsoon pan out. And while there have been deficits being reported across different parts of the country, and this is a concern and a risk factor that the economic survey has also alluded to, how are you reading what's going on with the monsoon at this point in time? How concerned, if at all, is industry with the monsoon?
Shireen, the monsoon is playing out far better than it did last year. And while we do see some deficits in some parts, we will have some ups and downs as we go through these 4 months. But on balance, it seems to be pretty normal. And that would augur well for rural overall and for the farm economy.
Okay, that's good to hear. So it's panning out better than last year. That's the view in from Anisha, and he would know a thing or two about how it impacts the rural economy. But Anisha, finally, we're just about an hour away now, or less than that, from the announcements. If I were to get you to stick your neck out and tell me what you believe is definitely going to be an announcement that the finance minister is likely to make of the many asks that have been sent to her, the one bet that you're likely to make.
The one bet, Shireen, is going to be higher capex formation, higher than what we saw in the interim budget.
Anand, same question to you. The one thing that you would bet on?
I'd bet on skilling and job creation.
Well, skilling and job creation. The question now is, what will the roadmap be to deliver on that outcome? Are we likely to see more PLI schemes? Are we likely to see employment-linked incentives, which is something that industry is suggesting? to the government? Will we see more being done for MSMEs and manufacturing as a whole? Of course, different parts of it, whether it's IT, whether it's the component sector, and so on and so forth. But gentlemen, we will have you back and harass you a little bit more with your take on the fine print as and when the budget is revealed. Thanks very much for joining us with your expectations as we go into the budget. The market at this point in time, not doing very much. It's 50 points lower on the Nifty Bank, the sensex and the Nifty. The sensex just about up in positive territory, 20 points higher. Prashant, back to you.
Well, I mean, Shireen, this is the definition of going in flat, right? There's, I think, 1.5 point change on the Nifty. So awaiting the budget announcement, the speech to start at 11 o'clock. But a very interesting conversation there from some of the corporate honchos. What we'll do is we will, I think...
yeah. Prashant, just a minute. What the corporates are saying is something which I think the economic survey was reflecting. You know what Anand Goenka and Anish said, finally, what would you want? Job creation, skilling. And the economic survey said that hereafter we can't have big reforms like GST. Big bang can happen only once in a way. Now it is grunt work. It is nuts and bolts work. Get your education in space. Remove the gap between education and employment. I think that grunt work is what we have to expect. Boring budgets are good budgets.
Are good budgets, and absolutely put your head down and sort of continue to work hard. We'll take a quick commercial break here. Markets are flat, but we come back and we get you the tax picture in some detail. So we'll have Rajiv Dimri from KPMG India and Dinesh Kanabar from Dhruva Advisors, and we put the spotlight on expectations on tax changes, if any, from the union budget. Stay with us.
इन टमी को कम करने के लिए ना सर्केडियन रिदम को समझना ही पड़ेगा।
पेट अंदर करने में बहुत पापड़ बेलने पड़ते हैं। थैंकफुली इंडेक्स फंड में इन्वेस्ट करने का फंडा है क्विक एंड सिंपल, जस्ट लाइक 1 2 3 save on cost more for you.
Quick and hassle-free investment option.
Match the market effortlessly. जब लाइफ मांगे मोर, बढ़ो इंडेक्स फंड्स की ओर। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से संबंधित सभी दस्तावेज सावधानी पूर्वक पढ़ें।
Well, it is the morning that we've been waiting for when Finance Minister Nirmala Sitharaman will rise in Parliament to present her 7th consecutive budget. With that, she makes history. It's a record. She will break the previous record of former Prime Minister, the late Morarji Desai. But while the Finance Minister makes history with her 7th budget, this is also the first budget of a truly coalition government, because remember, the BJP does not enjoy absolute majority this time around. So what will the factors be?
Well, we are inching closer to 0 hour. Just 10 seconds ago, when we were in the commercial break, we saw the finance minister and her team entering North Block. So leaving from home, we saw her meeting with the president. And incidentally, oh, there it is, pictures of the FM entering Parliament. So the 0 hour is approaching. Just a word on why she met the president. Under the Indian law, Indian constitution, the president causes the budget to be laid on the table of the House. So while the president has the ability to send back any law, ultimately he or she has the final say on laws and can send it back to the Lok Sabha. The one law she can't send back to the Lok Sabha is the budget, because she causes the budget to be laid. It comes with her approval. That's an excellent design or architecture of the Constitution. Speaking of which, we have to come to the other big architecture of tax. We have with us our guests, Rajiv Dimri, the head of tax, KPMG India, joining us remotely, and Dinesh Kanabar, CEO, Dhruva Advisors, joining us in the studio. Mr. Kanabar and Mr. Dimri, thank you very much indeed for joining us. Mr. Kanabar, lots expected on how they may tackle this, F&O volumes and the equity exuberance. The economic survey only increased our fears and expectations on that score. What is available to the government?
So today, F&O trade, people who do F&O regularly are taxed as business income. The question is, could the government recategorize that income as speculative income? Now, today for speculative income, there is no special rate of tax, but it is assessed as a separate block, and the losses there can't be set off elsewhere, etc. So first question is, can you put it as a separate block? Second is, can you make that block tax at a higher rate? Absolutely possible. So number two. So if both of these happen, and then the third weapon, as we were discussing very briefly, is whether there can be an increase in the securities transaction tax on F&O trade. And while the impact of it per trade may not be really that significant, it will yield a huge amount of revenues to the government.
Yes.
So that I can see as three distinctive blocks which can be used, or should be used. Just reminiscing a little bit. I used to be on the board of National Stock Exchange, and at that point of time, we had inaugurated a training center, and Prime Minister had come down. And this was in the month of November. And while he was inaugurating the training center, he made a point to say, I can't understand Indian market has become a gambling den. And this was about 5 years ago. 5 years ago. So this is the refrain that F&O has gone beyond all limits, has been going on for 5 years. We have now heard the chairman SEBI and everybody else talk about.
Now it's in the economic survey document. The phrase akin to gambling, so that kind of pretty much lays out the thinking.
So these are the three things which are available. Let's see what happens.
But will it do the job, Mr. Kanabar? Of if the idea is to reduce speculation and the explosion of retail volumes in F&O, will what you're saying is available to the government, if this is done, will it do the job?
Two things. You asked me a question, what's available from the tax side?
Correct.
And I just stopped at that.
No, because regulatory measures from SEBI side is being worked on, lot size increases, strikes, etc. But from a taxation perspective?
From a taxation, these are the only revenues which are available. There is nothing else with the government can tax you at a higher rate. So you come back and say that instead of 30%, it will be 40%, whatever rate of tax. And the government can come back and say that whatever losses you make there, you cannot set off. This will be standalone. They could go back and say, and this could be a very radical thing, not something which I would think is desirable. But since you are asking how radical it could be, the government could come back and say, speculative income and speculative loss can't be set off against each other.
There's another concept.
That's an extreme. That's not taxing real income. I'm just responding to a question as to what else it could do.
The point that you made about tax, if they explicitly say this is speculative income, and it's charged taxed according to the slab rate, right?
That's right.
Or they can also come and say that this will be
at a flat rate,
at the highest marginal rate. It's
absolutely
possible. That is also
absolutely possible, because that's something which is happening. For example, income from race horses, etc., are taxed separately at a highest rate. Same thing could happen for F&O.
So speculation is one aspect of the debate, and we've heard various regulators talk about it. The other part of the debate is whether there is a need to do something to mobilize more bank deposits, which also seems to be a big issue. Let's bring in Mr. Rajiv Dimri, head of tax at KPMG India, into the conversation as well. Mr. Dimri, what's your sense? Do respond to what Mr. Kanabar just said in terms of options to curb speculation. The other piece is whether there can be some tax measures that once again incentivize long-term deposits. I mean, right now the exemption is just a very sort of meager 10,000 rupees on the interest income. Would you expect anything else that can make bank deposits, good old-fashioned deposits, more attractive?
So a couple of points. I agree with Dinesh Bhai about the options that are available in tax. I also would extend to say a tax law should be only left to do the taxation and should not become a regulatory law. And therefore, we should not try and regulate a sector through the tax laws. That should happen separately. On the point that you're raising as to how can we incentivize or encourage bank deposits, I have a larger take on this. If we look at the trajectory of tax collections, both for direct tax and indirect taxes, I think it is needless to say that the government has done well. The tax technology has, been playing out and it is stabilized. I think it is time to reward taxpayers at large, and therefore, whether it is deposits, whether it is other forms of savings, there has to be some incentive and some feel-good factors sent back to the large taxpaying community, because the taxpayers have responded and the government has done enough collection. That trajectory has been great. So it is time in this budget, I hope to see some reward mechanism and encourage the widespread taxpayers to encourage whether it's deposit or other forms of investments, which builds equity, capital, so on and so forth.
No, but I guess, Mr. Kanaba, let me ask this to you. I think the incentivization to build equity capital has been there for a while. And even when they brought in this 10% on long-term capital gains, there's still the 1 lakh rupee, yearly exemption that we get. So I ask you the same question. Should we expect any sweeteners for the oldest instrument in town, the bank deposit, considering the wild debate out there, whether there is too much financialization going on, which is what the economic survey talks about?
So, very, very interesting question. And, as I was driving down to the studios, I was watching your guests at NSE. And Nilesh was actually making a point to say that should we not actually sweeten the equity, because that's where wealth is being created. Everything else just gives a normal rate of return. So there are points and points of view. But that said, very seriously, I think it's a question of whether the government should have incentives at all or not. That's a more fundamental question. To my mind, the government has been pushing people towards a new tax regime where we are not talking of exemptions and deductions, but a lower rate of tax. People should be free to make their judgment calls on the basis of advice that they seek, broad basing their portfolio in variety of things that they need to do. I don't think tax incentives really can or should be the basis of making things happen.
On the new versus old tax regime, I think in the new tax regime, effectively, you don't pay tax till an income of about 7 lakhs.
That's right.
But do we have the data in terms of what is the is adaptation still slow, because, or has everything been done already in previous budgets to make it more attractive? Because the government is encouraging people to move.
Yeah. So I go back to corporates, where this scheme has been around for a number of years. And I would like to believe, and again, I don't have statistical data, but from my empirical practice and evidence, I can say there may be 85-90% of the corporates have moved from old tax regime to new tax regime. Nobody wants deductions, exemptions. People just want to move on and say, this is what we want to do. Compared to that, individual is only a year old. And it takes 2, 3, 4 years for things to settle down.
There is also a big difference in taxation, right? Corporate taxation and personal income taxation. I mean, in terms of just the absolute, the levels of taxation.
Yeah, but that's not the right comparison. The right comparison is that in the corporate, it's 25 versus 30 plus surcharge, 35 plus surcharge. Whereas when you look at individuals, the gap is not still that wide. And the question is, what will the government do this year to make that gap wider and wider and incentivize people more and more to move towards new tax regime? So whatever concessions I anticipate will come for individuals will come for the new tax regime as opposed to... So I'm sorry to take a counterpoint to yours, but I don't think government is really going to give incentives for the old tax.
I mean, that would be a departure from their stated path, right? They've been talking about reducing deductions and moving to this new low tax, no deduction regime. So
makes absolute sense.
But let me put that to Mr. Rajiv Dimri as well. Mr. Dimri, the stock markets at least are expecting something on housing for a whole host of views. Housing is the only employment-intensive construction. Bridges are no longer constructed with that many, armies of laborers as it used to be.
And they get washed away.
Exactly. Okay, that's a different one. Anyway, so housing, a many-sided expectation. Do you think we should see any tax gain giveaways over there?
I come back to my point, and I would want to make a distinction with what Mr. Kanabar is saying, that, there is a new scheme and there's a new design that we need to move away from incentives. I agree. But I'm at a larger point that if there has been buoyancy of collection and if the government is successful how do you reward the taxpaying community in various forms? Housing is still a basic necessity in India. There are still people who need to own their first houses, growing population, young population. So it is a sector that is needed not just from an economic activity perspective, it is also a sector that is needed from the larger population. And therefore, encouraging investment in housing is something that must continue. If at all, it must get encouraged more. What should be the mechanism? That may be, various ways to talk about it. But to imagine that we will have a most simplest form with absolutely no incentives and the lowest tax rate, while it's very appealing, there are ways in which we want to discourage certain type of consumption and certain type of investments. We also need to encourage certain type of consumption and certain type of investment. It will be done through the combination of corporate tax. It also could be done in the combination of GST, which is another tool that is certainly available to the government. And we should also look at a combination of those two tools.
Right. We're jumping from sort of one tax to the other, but Mr. Dimri, good to have you with us here. On, again, just coming back to capital market taxation on mutual funds, especially on things like arbitrage funds, which is a category which has grown very, very large now, and that gets equity taxation. There is some fears that it could the government could look at moving that on the to the debt side in terms of taxation levels. Any thoughts?
I would defer to Mr. Kanabar on that, but the point that you just raised that, we still leave large economic segments and particularly emerging segments with a lot of anxiety in the investors. And there has to be a more proactive mechanism rather than, things coming in after a point of time and disrupting a certain activity. And therefore, that is a continuous area, whether we look at gaming industry, whether we look at crypto, whether we look at things seem to catch up later, rather than it being done proactively. That fear factor and that certainty has to be created as an ongoing mechanism. But on the specifics, I would defer to Mr. Kanabar.
All right, and we'll talk more about that as we go along. Thanks very much for now, both of you, Mr. Kanabar and Mr. Dimri, for joining us and running us through expectations straight up. We'll take a quick commercial break here with news that the market is down. We're down about 40 points on the Nifty. Samira Chakrabarti of Citi, Pranjul Bhandari of HSBC, will be joining us. We'll also have Kaushik Das coming through in just a bit from now. We'll talk about the big budget numbers, the big macro numbers, which the market will take direction from as well. Stay tuned.
There is no solution for A raised to the power
लाइफ में कुछ चीजें हैं बहुत complicated. But investing with index mutual funds could be as simple as 1, 2, 3.
Save on cost, more for you. Quick and hassle-free investment option. Match the market effortlessly.
लाइफ को करो simple. Choose index funds क्योंकि index funds simple है.
जब लाइफ मांगे मोर, बढ़ो index funds की ओर.
म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है. योजना संबंधी सभी दस्तावेज सावधानी पूर्वक पढ़ें.
Well, it is the morning that we've been waiting for when Finance Minister Nirmala Sitharaman will rise in Parliament to present her 7th consecutive budget. With that, she makes history. It's a record. She will break the previous record of former Prime Minister, the late Morarji Desai. But while the Finance Minister makes history with her 7th budget, this is also the first budget of a truly coalition government, because remember, the BJP does not enjoy absolute majority this time around. So what will the factors be that the Finance Minister will have to weigh in? There are already demands from allies like Andhra Pradesh and Bihar. Will we see those being accommodated in the budget is the big question. Outside of that, what we pick up from all of our sources is that the budget will build
Welcome back to the CNBC TV in Motilal Oswal Budget Headquarters. So we are getting closer and closer to 0 hour, and we now have 3 prominent economists to tell us what the big numbers will look like. Samiran Chakraborty, Chief Economist at Citi India, Pranjul Bhandari, the Chief India Economist at HSBC, and Kaushik Das, Chief Economist at Deutsche Bank. Gentlemen, and Pranjul, thank you very much for sparing time for us. Samiran, to start with you, what have you picked up from the survey that changes your mind about the budget in terms of, estimate of the GDP, estimate of tax buoyancy, anything?
So, Lata, the ECO survey, as you know, has put a real GDP growth forecast of 6.5 to 7% for what on the conservative side, but it kind of matches with the interim budget nominal GDP growth estimate that was taken to be around 10.5%. So we don't think that that changes much in the actual budget numbers. And it also looks like that the economic reform paths that the survey talks about, clearly highlighting that the supply side reforms of the last 2 governments that have borne fruit. And on top of it, we have to now do the next gen reforms, which will be more about the bottom-up reforms. So I would expect that the budget takes that forward and that outlines the next 5 years plan for the government. I think that's what will be more important. The 10 basis point of GDP, higher revenue or higher expenditure is not something that will have a very lasting effect on markets. It's the idea of the next 5 years of reforms that will really be more exciting for us.
Okay, point taken. Pranjul, your thoughts. There is a point of view that this 1.3 trillion extra money from the Reserve Bank is a one-off. And logically, you should not spend it on welfare programs that will recur year after year. They are best used to set off the budget deficit. Your thoughts? Should we expect 4.9?
Yeah, thanks, Lata. Actually, I am expecting 4.9. But just to take a step back, I think the economic survey was extremely realistic. It gave you a GDP number of 6.5 to 7, which is actually lower than what the RBI has been talking about. It spoke about how the whole Viksit Bharat trajectory is going to be hard because the global economy has changed. Rates are higher, geopolitics, AI, climate change. It's not going to be easy at all. Everybody will have to work together, government, state, private sector. So it was very realistic. And I'm hoping for the same realism in today's budget. Now, when has the budget come to us? It's come at a time when we are seeing few things working well. For example, construction activity is good, public capex is good, but a few things not working very well. For example, consumption. And my sense is that the budget this time can do well what it has continued to do. For example, focus on fiscal consolidation, keep a keen eye on capex, and I'll get back to that in a minute, but do the new thing that is also needed, which is give some sort of a fillip to consumption. Now, it doesn't have to get profligate, but better fund some of the welfare schemes it has already been running. For example, PM Kisan, Narega, some of the rural and social welfare schemes, just better fund that. Because if we see other current expenditure, which is excluding subsidies and interest payments, it's actually much lower than pre-pandemic levels. So just increase it by about 0.2% of GDP. You have the revenues in a very perfect year. Don't announce a new scheme, just better fund some of the old welfare schemes. And I'm hoping that to show up in the budget this time. A better balance between capex and consumption than we saw back in the February budget.
Okay, well, actually, Samiran, you said you expect some 5-year kind of announcement, which makes sense because this government was preparing for the first 100 days of announcement even before the elections. What can we expect?
I mean, there's nothing. I mean, understand first that there were certain things that the government was doing very well, like, say, for example, infrastructure spending, a push towards manufacturing, keeping the macro stability intact. So I would think that continuity on these things will very much be required. But it's also important to put the guideposts in front of us. So let's say on infrastructure, what is the next 5 years roadmap for infrastructure? If the budget lays down that roadmap, it immediately gets the markets more excited about things. So that sort of announcement in the budget is what I would be expecting. And then to take a leap from Pranjul, what Pranjul said, would this be balanced by something on the demand side? Now, the economic survey has not talked explicitly about any demand side measures. It talks about doing a lot of social welfare issues and where the government has played a major role. But would we see allocations going higher for this? The only challenge there is that this RBI dividend this much of RBI dividend might not be available every year.
Yeah.
So we might have limited scope of doing this. So that has to be very nicely calibrated. And then the last is what I was mentioning, that the next generation of reforms, what are the ways in which what the economic survey talks about removing the regulatory bottlenecks? Is there a roadmap for removing these regulatory bottlenecks? If those things come in the budget, I think that will really make it a very exciting one.
Absolutely, Samiran, take your point. By the way, I was going through your note, and I thought the point that you made on the quality of expenditure improving over the last couple of years, that was a great point, right? I remember the numbers as well, from about 15.5% of GDP revenue expenditure, that number coming down to 12%. Capex, average increasing 30% year on year. That was a very big directional shift that we saw in the last few years. So Kaushik Das, let me come to you. Kaushik, do you expect that directional shift to continue with maybe, some sweeteners here and there? And if yes, then what kind of sweeteners? I mean, let's say subsidies. What would you expect? Because what we've seen in the past is a gradual reduction in subsidies, an increase in defense, an increase in infrastructure. Do you see any departure from that past trend?
Yeah, hi, good morning. I think the budget would kind of stick to the fiscal consolidation path. Our base case scenario is 5% target for this year, better than the interim budget estimate of 5.1, with the possibility that you can go down to 4.9% of GDP as well. So let's see. I mean, I'm expecting somewhere between 4.9 to 5%. Now, as you've discussed, the RBI has given quite a lot of funds to the government of India this year through dividend. So I think it will be a mix of everything. You will get a bit of consumption boost to the items which are already there in the budget. You don't need to add any new welfare programs. Whatever programs are there, whether it is rural development or any kind of other programs that you can think of, there could be additions by 5,000 crore, 10,000 crore here and there. Subsidies that you mentioned, maybe food subsidies will be a little higher, fertilizer subsidy. So all taken together, I think about 80,000 crore would be additional expenditure compared to the interim budget estimates. But that would still leave about 50,000 crore, in savings because the excess that the government has got from RBI is in the tune of 1.2 to 1.3 trillion INR. So that 50,000 crore is equivalent to 0.1 or a little bit more of GDP, which can bring down the fiscal deficit to 5% or even lower. So I think it will be a delicate balance of how you can boost a bit of consumption, but not cause inflation. We know that the capex push will be anyway there. But remember that last year was about 9.5 trillion INR. This time they've said 11.1 trillion. But you have to spend that 11.1 trillion in a relatively short period of time.
Yeah.
So I would not expect too much of capex increase on top of what we already have, which is itself a good number. But overall, I think it will be a balanced budget focused towards fiscal consolidation while providing a consumption boost, which is possible because of the RBI dividend.
Point taken. There is only actually another budget is coming in 6 months on February 1st. So, where is the bandwidth if you put in more money on capex? And that is the one point where if you see the April-May, central government numbers, that is where the government has fallen short. Capex spend. They've done much better on taxes, which brings me to the final question, Pranjal. Tax buoyancy, both FY24 and FY23, much better than what the budget estimates put in. So would you expect them to continue to expect more? Will that be the big number change? GTR or net tax revenue?
So, we've been seeing that the government goes into these budget numbers very conservatively. They, assume a very conservative tax buoyancy of 1 to 1.1. And what we've been seeing in practice is numbers like 1.2 and 1.3 coming out. My sense is it'll continue to have that same, conservative stance today. And, hopefully we'll be surprised on the upside, by the time the year ends. So I don't see any big change there, but I do agree that tax buoyancy, once it goes higher than 1, it stays higher than 1 for a couple of years, because we're seeing in India these structural changes, better tax information network, bringing together Aadhaar and different other platforms, and basically, much better tax compliance than in the past. The tax buoyancy will remain more than 1 for longer. Lata, if you have like 10 seconds, I want to make a quick point on capex. I think rather than just looking at the capex number, where I don't think there's going to be any change compared to February, I think we need to get into a lot more details now. They had earmarked about 700 billion, 70,000 crores, and they had not really said where it will go. Those details will be important. They had also said that 750 billion to states in terms of capex loans will be conditional. How will those conditions be designed? What will be the details? I think these finer points will be very interesting in capex, because we need to get a little more sophisticated there. Right now, most of the capex has happened in roads, railways, and defense, but we need many more shovel-ready projects in many more sectors at this point of time to keep the capex story alive for longer. So getting into the details of capex, I think, will also be important in today's budget.
All right. Thank you very much, all three of you, for joining in and giving us the expected budget math. Let's see how the eventual numbers turn out, and we'll touch base with you again. Thank you very much for being with us this morning. Let's quickly head across and touch base with Shireen now. I believe she is with the top leadership at CII. Shireen, over to you.
Well, that is right. 30 minutes to go for the finance minister to present the union budget, and I am joined by the top brass of the Confederation of Indian Industry here in the capital. Gentlemen, appreciate you joining us here on the program. Sanjeev Puri, the big message for the economic survey threw up was, we have carried the baton so far. We're giving the baton to private sector, and now it is your turn to deliver on the corporate profitability that you're sitting on. Are the animal spirits now set for release and set for being unleashed?
I think the animal spirit or the spirit of entrepreneurship in India has always been very strong. And that's also reflected in the growth of the private, capex, which is higher than the pre-COVID levels. So it is actually on good footing, good momentum. And broadly, let me say it was good to see what the economic survey had to say about the health of the economy, and the mood in the industry is also optimistic. And we within CII actually look at this as a partnership, for the economic transformation. So there's a role that industry has, and industry is committed to play that role. And there are a lot of good work on policy that has happened, particularly at the central level. I think there is more that needs to be done, and a lot of that actually is closer to at the state levels.
Yeah.
This will unlock and bring in more productivity and more unlock more opportunities in the economy. So we do need to deal with these issues on providing impetus to some labor-intensive sectors, looking at sectors on agriculture, rural.
So do you expect more PLI schemes for labor-intensive sectors? Do you expect targeted incentives for any specific industry?
So we would look at more towards what we call the ELI, that is more for employment-intensive industries. So which has something linked to employment and something linked to the outcome in the industry. That's where we would look at, and a lot more focus on rural.
Lot more focus on rural. I'll come back to what specifically you believe that the budget can do as far as rural is concerned. Rajiv Memani, from a tax point of view, I think the big concern is, will they do anything as far as capital gains is concerned? Do you believe they will, or unlikely this time around?
No, I think they will do something. Whether that will lead to, so you can do by changing rates of taxes, or you can change tenure.
Yeah.
So my My sense is that something they will do, because I think they have to find a way to simplify.
What would your bet be, on the rate or the tenure?
My bet will be on the tenure.
On the tenure.
Yeah, that's what I think.
So bring in parity with equities?
Maybe go the other way. Maybe bring in parity with what long-term capital gains is for most category of assets. So put that on the same page.
And if that were to happen, and this is your bet at this point in time, of course, we will see how the markets react to that. But, from a short-term perspective, you think that in terms of inflows, etc., what would the impact be?
Yeah, there'll be impact on valuations, for sure. I think there will be some impact on valuations. I don't think there'll be any impact on flows. But yes, there will be a short-term impact on valuations.
For the salaried class, the expectation again is that this is going to be the budget that finally delivers on that long anticipated move. Do you believe that the budget is likely to do that?
Yeah, I think they probably, given the fact that we have had inflation to the extent that we've had, and it's eating into the growth of consumption, I would say at the lower levels of income, if they can add to the rebate. So right now, if you add to the rebate up to 7 lakhs under the new regime, you don't have to pay taxes. My guess is they may want to add something to that. And also they may want people to migrate from the old to the new, which has